Hit it.
It's Friday, December 11th, 2020, episode 109. I'm Patrick Ceresna.
And I'm Kevin Muir. This week we welcome to the show legendary newsletter writer Dennis Gartman. We talk about his 35 years of writing one of the most popular newsletters in the markets, and then we find out who he thinks is the best trader of all time. Then for Talking Charts, Patrick and I are joined by Dave Floyd from Aspen Trading Group.
And this week in trading history, we go back to the hottest IPO of 1999, and we end with the segments of No Stupid Questions and Skin in the Game. And folks, we might even drink some beers along the way, so stick around. We got a great show. Lena, hop on. Who is this show? What beer are we drinking anyway?
Today we're drinking, I'm not even going to attempt to pronounce whatever it says on this can here, but we're drinking Eriksberg Original from Sweden. I believe it's part of Carlsberg Group, but don't quote me on that. And something about the beer, it says it's malty taste with hints of light bread, honey, and apricot. Nice. Short and sweet, just like the Scandinavians. No, I mean, when they speak, they just say whatever they need to say, not in stature.
What Scandinavians have you been hanging out with?
No. When they speak, they literally say what they need to say.
Okay, we'll help her out here. What do you think of the beer?
Yeah, it's all right. It's a North American
50,
tasting,
man.
Yeah, I was about to say.
Yeah, it's the exact same thing again.
It's sessionable. No, stop it. Okay, anyway, let's give us some disclaimers, Kev.
Nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in this show. Side effects of too much huddle may include the Disney dizzies, the lumbar lobotomy, and finally EV dysfunction. The Disney was unbelievable.
Yeah, that was. All right, let's get to our first interview.
It is our great pleasure to welcome to the show today Dennis Gartman. Dennis, thanks for joining us today.
You've obviously set your threshold very low for allowing guests to come on and speak. So.
Listen, Dennis, before we start, I just wanted to take a moment to say I read your letter from the time I was a young fellow. My father was actually the head of research at Richardson Green Shields in Winnipeg. Yep. And for a fellow that was sitting out there in the middle of the prairies, Winnipeg prairies, that wasn't very exposed to the market and didn't have a lot of ways to learn about it, your letter was a beacon of salvation to me. And I remember going to the telex machine and reading it. And I just want to thank you, because this is a little bit like meeting one of your heroes and one of your idols. I read your letters for many years.
Well, Kevin, thank you very much. You made my day. Hell with it. You made my week.
And so for those who don't know, Dennis wrote what was called the Gartman letter. And along with people like Marty Zweig, who wrote a great letter, the TGL, the Gartman letter was one of those staples on Wall Street. And more importantly, it was a staple among the macro community in terms of something that people would go and read and look at. And I'd love to just kind of get the story and understand how it came to be, because you were at the Pioneer. So why don't you walk us through when it started, how it came to be, and its evolution throughout the years?
It's a long story. I began my career at Cotton Incorporated when I was out of graduate school in Raleigh as an analyst in the cotton market, and I was responsible for understanding how the cotton futures market functioned, who used it, why it was used, how it was used, what good it did, what ill it did, if it did any ill at all. And from there, I traded foreign exchange at what was then called NCNB, North Carolina National Bank, for a number of years. And then in the late 70s, I got a seat on the Chicago Board of Trade. I'd always wanted to have my own seat, and I went to Chicago and traded in the bond pit. And while I was there, since I had been writing for Cotton Inc., I was reasonably facile at writing and reasonably facile at economic thinking, and hopefully taking complicated ideas and turning them into a rather simple understanding and put it into a proper sentence structure and proper paragraph structure. And then when I had my seat on the Board of Trade, I wrote myself a little diary every morning about what economic numbers were coming out, what the consensus of those numbers were, what people thought the numbers should be, and how the market should react. So I had a little cheat sheet, as it were, that I carried into the note pit at the time. The bond pit was physically too big for me, so I traded in 10-year notes. and signaled in my orders into the bond pit. But a couple other traders said, we like that little cheat sheet that you're writing. Would you sell it to us? And so I started selling it to a few of the other floor traders on the CBOT floor. And it grew from there. I moved to Virginia, became a bank executive for a number of years, but taking an ex-floor trader and turning him into a bank executive was an ill-advised decision on both parts. So I decided in 1984 to try to write a daily commentary on the capital markets. I had some foreign exchange experience. I had some bond market experience. I had some agricultural commodity market experience. And I noticed, it struck me odd when I went to New York one time and was at one of the large brokerage firms' trading floor, that the oil traders didn't talk to the grain traders, who didn't talk to the foreign exchange traders, who didn't talk to the metals traders, who didn't talk to the bond traders, who didn't talk to the equities traders. They all stayed by themselves. And I thought somebody should write something that had an overview of how all the capital markets functioned. What impact did the foreign exchange have upon the bond market? What impact did the bond market have upon the grain market? What impact did the grain market have upon the energy market? What impact did the energy market have back upon the bond market in a rather circular fashion? And that was what I thought I would do, and that's what I thought. That's what I did. I wrote a daily commentary on the global capital markets. I always called myself the jack of all trades of the capital markets. If I told somebody who traded grain more about the grain market than he or she knew, he or she was not going to be trading grain for very long. And if I tried to tell a bond trader more about the bond market than he or she knew, he or she was not going to be trading bonds for very long. But I could tell the bond trader about what was happening over in the foreign exchange market that might affect his or her bond position. And it evolved from there. And the first iteration of the newsletter, this is rather interesting. I think I was actually the first e-business and didn't even know it, because my first 10 clients or so of the newsletter institutions, I actually had an Apple IIc computer that I wrote my newsletter on at the time. This is back in the middle to early 1980s. And it transmitted at 300 baud, which is hard to believe that 300 baud, but you could actually see each letter go by on the screen. DENNIS space GARTMAN space. It transmitted about that speed. I bought these 10 people an Apple IIc computer and transmitted what was then the newsletter, and it was called MCI Electronic Mail Services. This was back in the middle 1980s. That became I started printing it then, because the fax machine became ubiquitous. And by this time I had like 35 or 40 subscribers of institutional strength around the world. And I would print out one copy of the newsletter, put it in my fax machine, send it to one person, send it to another person, send it to another person, send it to another person. And a group called me out of Washington and said, look, we hear you're sending about 35 or 40 faxes a day out, trying to get it out at one time. We can burst it all at one place in one instant, and we can go back and make sure that everybody gets it. We'll retry it 10 times to each of the clients, and we'll send you a list of who got it and who did not get it, and you only have to send one copy. I thought that was genius. I thought that was brilliant. My fax charges after about 2 or 3 years were getting close to $20,000 a month in fax charges.
Oh, come on, really?
Yeah, wow.
Holy
Really.
smokes.
And then finally, this thing called the internet became ubiquitous in the early 1990s. God bless Adobe Acrobat. God bless the internet. And I went back to what, as I said, had been a MCI electronic mail. I started sending it out via the internet, which sent my fax costs from $20,000 a month to zero. And it was a much better, much broader, much easier delivery system. And word of mouth carried through for the next 25 or 30 years. I got up every morning at by the time it was done, I was getting up the last 25 years or so, I was getting up at 1 o'clock in the morning to have it prepared and out by 5 a.m. I tried to get it out between 5 and 5:15 so that the people in London got it at about 10 o'clock in the morning. The people in Japan and Hong Kong and China were getting it before they left for the evening shift. And the people here in the United States and in Toronto were getting it at 5 o'clock in the morning. There was a very succinct period of time to try to get it out where it was amenable to everybody. So it was a long and circuitous and pleasant experience. I had good fun for 30 years doing it. Now I retired as of December 31st, and I'd still communicate with some of the clientele and still watch what the markets are doing, still trade from my own account every day. But it's been a great labor of love. I was very lucky to have been at the advent of the fax machine, the advent of the internet, and I'm still not very computer facile, but it worked out well for me. It worked out well for my lovely bride, who is a better businesswoman than I am, and she knows how many subscribers we had. I never knew how broadly disseminated the newsletter went to. She did, Margaret did, but she still hasn't told me how many subscribers we had.
She's tucking all the money off to the side so that you don't know.
Well, it was a deal that we hatched out when we got married. I said, I have no idea how many subscribers I have. You're a CPA. You're a better business person than I am. Here's our deal. I want $500 in my pocket, my country club dues paid, the house paid, and the rest of it's yours. And it's worked out to be a good deal for both of us.
So how did you go about selling it in those early days? Because it wasn't something anyone was doing. And was it all word of mouth?
It was basically, yes, it was all word of mouth. I never advertised, never took an advertisement in the Wall Street Journal, Barron's, Business Week, anywhere. I used to make speeches a fair amount. I used to be far more facile speaker than I am right now. I've got Parkinson's disease, the early stages of it, so it's making my speaking a little bit more difficult and making my typing much more difficult. But in the early days, it was word of mouth, and it was I'd make a speech, and somebody would call me up and say, "I heard your speech. I understand you're writing a newsletter." But I never advertised, and we stuck by that for the entire duration of the letter. Word of mouth is the best of all methodologies of acquiring new clientele. And, in our business or in the business of trading, somebody's at the Goldman Sachs desk and they transfer over to what would have been Shearson at the time. And somebody was at Shearson at the time and went to Merrill Lynch. Somebody was at Merrill Lynch and went to Shell Trading. Somebody was at Shell Trading and went to Marathon. Somebody was at Marathon and went to Citadel. And they would all say, we don't get the newsletter here, but I had it at my old place. Can I get a copy sent here? Can I subscribe at the new place? And that's how it worked. It worked out very well for my wife and I and our two daughters.
Well, that's great. Now, so you've seen a lot of markets, and I remember reading some terrific stories of particular times in the market. And do you have any that you want to share that you could that were most memorable to you, either your days down in the pit or particular times in the market that you look back and you say that was truly historic?
I could regale you with stories from the pit for hours, but there were a number that I can remember most vividly. There was a friend of mine who was a graduate of West Point, Brad Rotter. I made Brad famous because Brad was and still is an extremely good trader, an extremely bright young man. He's my age, so I'm going to call him a young man. And one day, and Brad and I both traded in the note pit, and we'd walk over into the bond pit. And one day, the market was just as violent as any I've ever seen. We would trade the bond, almost trading limit up one day and 1 hour, and limit down the next hour. It was just extraordinarily violent. And I walked over to Brad and I said, "Brad, what do you think?" And he said, "I'm flat and I'm nervous," which I thought was one of the great lines ever. He had no position on and he was scared. That's how violent the market was that day. I can remember the Monday morning after what was commonly referred to as the Saturday Night Massacre, when who was the Fed chairman at the time? Tall guy.
Volcker. When
Mr. Volcker changed the monetary policy over a weekend, and on one side of the trading pit, it's a true story. On one side of the trading pit, bonds were trading limit up. On the other side of the trading pit, bonds were trading limit down. It never happened before. Hasn't happened since. It was an astonishing circumstance when it prevailed. They closed limit down and went limit down for the next 3 days as Volcker tightened monetary policy excruciatingly. Right. It was his move that ended inflation here and basically in the Western cultures. But that Saturday Night Massacre caused incredible tumult in the bond pit, but traded limit up, limit down on the opening, finished limit down, and traded limit down for the next several days.
Can I jump in here, Dennis? Because I'd love to know a little more about the psychology of investors at that time. Since then, we've had almost 4 decades of disinflation with lower interest rates and lower rates of inflation. And if we are to have kind of, let's just say, one of those pivotal moments where we go from this disinflation to inflation, a lot of investors might be left, clinging to those old ideas. Could you tell us, back in that Saturday Night Massacre, when I read my history books, it seems like a lot of people believed that inflation was no way that Volcker was going to tame it. There was lots of doubts. And I would love to kind of get your perspective. Was that the case? And was it one of these things that even as he was raising rates, people thought there was going to continue to be inflation? And what did it take for them to finally believe that he had kind of broken its back?
There is no question that people disbelieved that Volcker was going to be able to destroy what had been almost 40 years of inflationary impetus. Nobody believed it. I shouldn't say nobody. Volcker believed it. Maybe a few of his people that worked for him believed it, but nobody else in the markets believed it. And it took several years of tighter monetary policy and commodity prices generally collapsing for people to believe that this was now the end of inflation. You have to remember, back then, the long bond at one time, I'm trying to remember which year it was, but the long bond had a 14.25% coupon, a 14.25% coupon on the 30-year government bond. You couldn't give it away. Nobody wanted it. It went to a discount. I think that 14.25 went to into the middle 80s before it's turned around and went the other direction. Extraordinary. It takes a long time to end inflationary expectations. It's taking a long time to end disinflationary or deflationary expectations. It's just astonishing how well entrenched those ideas become and how difficult it is to end them. So, to be blunt, nobody believed that Volcker was going to succeed. Bonds at the time were called articles of confiscation, not either you weren't going to make money on a bond position, you were going to lose money on a bond position. Right. And it was almost funny in the pit at the time. There was a common circumstance. We used to trade on cards. You used to write your trades on cards and hand the cards into your clerk, who took them up to your clearinghouse every hour at the end of the day. And there was just a running commentary. The blue side of your card was the buy side. The red side of your card was the sell side. And the old line was, fill up the red side in the morning, fill up the blue side in the afternoon. And fill it, sell it first, buy it back later. It would always be profitable. And it took a long time for people to get over that fact. There were a lot of floor traders who made millions back in the 1970s and 80s, when $1 million was a lot of money. And guys that had made millions, $2, $3, $4, $5, $6, $10 million, and were legendary traders who got carried out of the pit over the course of the next 4 or 5 years when they couldn't believe that bonds actually could go up in price, yields could actually go down. It took a long time for them to understand that the game had changed.
Wow. Now, that's a great story. Another one that I remember you talking about was when some locals in the Canadian dollar pit decided that they were going to go and on a Canadian dollar in a Canadian holiday, we're going to move it around. Do you mind sharing that with us? Well,
there was always a tendency in the part of American traders when on Boxing Day, when you guys are still closed, to always to push the Canadian dollar one direction, higher or lower, violently, because there was no liquidity at the time, or lesser liquidity. And guys would always try to sell the Canadian dollar into Boxing Day. And several times it blew up in their face. I mean, it was just an old trade that people tried to do time and time again. So it's not nearly as prevalent nowadays as it was back in the 70s and 80s, but it was the Boxing Day trade. Everybody would try to push the market in one direction on Boxing Day, and invariably they would get called out on the trade. They'd find themselves on the wrong side, and it usually blew up in their face.
So, you mentioned the fact that that's no longer a trade, and that the kind of that's gone the wayside. Over your long career in the markets, you must have seen a lot change. What if you were to contrast the time when you started in 1984 to today, what would be kind of some of the big largest differences between those two periods?
I think it's the ubiquity of information. That's the biggest thing, is that back when I was starting the newsletter, maybe 10 people in the country wrote about what the weekly jobless claims numbers would be, or what the monthly employment numbers would be. And now, and back then, of 10 of us who would write and make guesses as to what the employment numbers would be, we might miss it by 60 or 70,000 back in the old days, which would be a huge miss. Now there's instead of 5 or 10 people making forecasts as to what the monthly employment number would be, there's 500 people making guesses. There's a greater ubiquity of information, and the speed with which information gets disseminated stuns me. I can't keep up with it anymore. It's just amazing to me how fast it's instantaneous. In the old days, it was on a telex machine, on a teletypewriter, on the Reuters machine, clicking away. And now it comes across your computer and everybody has access to it. So I think the biggest change is the ubiquity, the broad dissemination, the speed of information transmission is probably the greatest change. Secondly, the broader advent of the public's introduction into trading, whether it's stocks, whether it's foreign exchange, whether it's futures. The public is now incredibly involved in a way that I never dreamt possible. I never thought that I would ever see. And quite honestly, the public is usually wrong at turning points. And here we are on what's today, December 9. The public is aggressively buying stocks and touting their stock portfolios, and the insiders are aggressively selling it to them. And historically, when the public buys and insiders sell, it usually ends up very bad for the public. So that's a big change from 25 and 30 and 40 years ago. So I guess it's just the ubiquity of information, the speed with which information is disseminated, and the broader public and institutional participation that existed 40 years ago. Those are the three major changes.
One of the things that, in terms of the public, although I agree with you that they're in the markets in a greater force, and that in general that they might lose, although it seems that like these days all the Robin Hooders are running over the professionals, but that's a story for another. That's a story for another day. But I kind of look at it and I think that from my days on an institutional desk, we had that advantage of information that you talk about. And now it seems like almost the public, the playing field is so much more level. And that I will absolutely agree with. I think one of the, there's a number of things. One, the cost of doing transactions has declined so dramatically that the ability to get in and get out, if you're a public speculator, a public investor, the cost of entry, the cost of exit is non-existent for all intents and purposes. It's astonishing. You can do almost every trade for zero. And I do think that one of the great benefits was that some people will argue, but the fact on the New York Stock Exchange, the American Stock Exchange, the Canadian Stock Exchange, wherever you're at, it used to be in the old days that you traded eighths and quarters, and the bid offer on Apple would be 112 and a quarter bid, 113 and a quarter offered. Now it's 112.25, 112.26. So the bid offer is a penny instead of a quarter or a half or a whole dollar. The liquidity, the ability to get in and get out has become almost comically non-existent. Right. And so I think the field, there's no question, the playing field is flatter. The playing field is fairer than it was 25 and 30 years ago. No question in my mind at all. The people will argue and say that the institutions are that computers drive the markets. I guess that can be argued, and people may believe it, but I do think this is a fairer environment than I've ever seen, just because the information is so much more broadly disseminated, so much more broadly available, and the cost of entry and exit is so non-existent. Right. For those people that are always saying, oh, if I only worked at a big hedge fund, I would do so much better. One of the things that they need to realize is that when you trade that sort of size, the execution, it might take you half a day to put on a position. Whereas meanwhile, you just zip in and out, right?
Oh, if you're trading 2,000 and 3,000 and 4,000 shares, nowadays, I mean, you can get in and out for a penny. If you're trading 2 and 3 and 4 million shares, it's going to cost you 5 or 6 or 10 cents or 15 cents or the whole afternoon to get it accomplished. Now, 100 shares, 500 shares, 1,000 shares, 5,000 shares, you can get in and out within a penny bid and offer, and it's just so easy to get it accomplished, to get it done nowadays. Yeah.
Right. So you've seen a lot of traders throughout the years. You must have talked to a lot of your clients, a lot of the different traders that are on the desk, and met a lot of just legends in the business. Is there any sort of skill set or mindset that you kind of think is universal amongst them?
The ability to say you're wrong. That's what separates pros from amateurs, is the ability to say you're wrong. Amateurs can't. The public invariably doesn't say it's wrong, and pros who survive have gone through periods of time when everything they did was wrong, and they had to admit it and get to the sidelines and say I got that trade incorrect. The public tends to buy a stock at $115 a share, buy more at $105 a share, buy more at $95 a share, buy more at $85 a share, buy it all the way down to $50 a share, and then puke. The pros buy it at $115 a share, maybe buy a little more at $105, but if it goes to $95, they're gone. Right. And I think that's the biggest thing. The ability to admit that you're wrong, and what really separates the best pros from the really great pros is the ability to put a trade on, watch it go against you, get out, then watch it go back in the direction you thought it was supposed to go originally, and to put it back on. That's when you're really, those are the guys with a PhD in trading.
So, now that you're no longer writing your letter and you don't have your clients that get mad at you, maybe you could share, out of all the traders that you saw, were there anyone that really impressed you, like that you would put at the top of your list? Sure.
Paul Tudor Jones. I put him number 1. Number 2 was Paul Tudor Jones. Number 3 would be Paul Tudor Jones. And number 4, Paul Tudor Jones.
What made him so great? Like, obviously he was the type that did those 2 things that you just mentioned. Were there any other skills with him that really set him apart and made him that great?
When he had a trade that worked, he'd beat it into submission.
So he wasn't afraid. Like, that's the old line about Soros, that he wasn't afraid to really go for it and be a pig, right?
Yes, exactly. And that's hard to do. I mean, that's really a great talent. So, who was Soros's sidekick during the
Druckenmiller?
Druckenmiller. Stan has the same great talent.
Right. And so one of the things that you did that was kind of one of the great, how shall we say it, documents that's passed around is something called Dennis Gartman's, is it the 22 Rules of Trading?
Well, it would change every year. It started out as the 18 rules of trading, and then it became 21 or 22 rules. But basically, I tell myself it's 20 rules of trading. And I would put out an edition every that was my holiday edition on Thanksgiving Friday. I would put out a new rendition of the rules of trading.
Okay. Do you mind if I ask you a few and you can just comment on them?
Sure.
Okay. So this is one that I like. Capital comes in 2 varieties: mental, and that is what is in your pocket or account. Of the 2 types of capital, the mental is the most important and expensive of the 2. Holding to losing positions costs measurable sums of actual capital, but it costs immeasurable sums of mental capital. What did you mean by that?
There's nothing worse than having a losing trade on, and the only thing that's worse than having a losing trade is adding to a losing trade. And when you're adding to a losing trade, you're getting mentally debilitated. You're getting beaten up. And so there's only X amount of mental capital that God gives us. Don't waste it. That's the important concept. Don't throw it around down the rat hole. So yes, there's 2 types of capital: that which is the cash that's in your account, and your mental acuity. And when you're wrong and you're doing more of the wrong things, it's amazing. You'll screw up your life. You'll screw up your family relationship by holding on to a bad trade. You just hemorrhage mental capital. So don't do that. Try your best to avoid that.
Okay, in bull markets, we can only be long or neutral, and in bear markets, we can only be short or neutral. That may seem self-evident. It is not, and it is a lesson learned too late by far too many.
I have to teach myself that all the time. I have to relearn that every year.
You and me both, Dennis. You and me both.
We try to get far too smart. For example, right now it is a bull market in equities. No ifs, ands, or buts about it. And there are times when the market gets overbought, when it gets overextended, which I think it is right now. And I think we're in for a pretty sizable correction. But you don't get short. It's a bull market, so you either are long or neutral. Right now, I think neutral is the place to be. There will be a time when it is right to be bearish, and when it's right to be bearish, then you get short. And when it's a bear market, you're either short or neutral. That's a hard thing for most of us to try to understand, and we try to catch. Too many times we try to catch the market in both directions, and when you do that, the trading gods usually elicit a large debit in your account.
Right. And, back to Paul Tudor Jones, he said before that the one way to avoid that is to only trade stocks or securities that are above their 200-day moving average from the long side, and to only trade stocks or securities that are below the 200-day moving average on the short side. And in essence, that's kind of encapsulates what you're just talking about.
Yeah. There's brilliance in that. That's why he's such a good trader. That's why he's such a great investor. That's why he's a billionaire.
That's right. Okay, let's try this one. Try to trade the first day of a gap, for gaps usually indicate violent new action. We have come to respect gaps in our nearly 30 years of watching markets. When they happen, especially in stocks, they are usually very important.
It's one of the great rules. It used to be a better rule than it is now, because in the old days, the stock market would close and there wouldn't be any trading until the next day opening, and the futures would do the same thing. Now there's almost 24-hour trading, so you rarely do you get gaps except on Monday mornings. But take a look at a chart that I like a lot. I got famous for saying I want to own the things that if I drop them on my foot will hurt, i.e. I like to own steel and railroads and ships and coal. And I've never understood tech, so I want to own simple things that I can count and understand. Take a look at U.S. Steel. It left a gap about 3 weeks ago to the upside, and it's just run away from it. So gaps tell you that suddenly the game has changed. I'll buy the first day of a gap. If the gap holds for 3 days, I'll buy more.
Okay, how about this one? An understanding of mass psychology is often more important than an understanding of economics. Markets are driven by human beings making human errors and also making superhuman insights.
I've always said that the market is the sum total of the wisdom and the stupidity of everybody who trades in it. So maybe the greatest comment ever made about the stock market, or about any market generally, the markets can get overextended and get irrational. And John Maynard Keynes once made the greatest statement ever, as far as I'm concerned, that markets can remain irrational far longer than you or I can remain solvent. And my corollary to that is that the market will return to rationality the moment you have been rendered insolvent. For example, there was a great, from 1997 to 2000, the dot-com circumstance, that was irrationality of the first order. It was irrational in 1998. It was irrational in early 1999. It got even more irrational through all of 1999 into early 2000. Finally, it broke, but it took 2.5 years before it broke, before the irrationality returned to the rational. So markets can remain irrational far longer than you or I can remain solvent. Maybe one of the greatest statements about trading ever made.
Well, I'm going to give you the one that I love best about your rules. It's this one: the hard trade is the right trade. If it is easy to sell, don't. And if it is easy to buy, don't. Do the trade that is hard to do and that which the crowd finds objectionable. Peter Steidelmeier taught us this 25 years ago, and it holds truer now than then.
Pete Stottlemyre was one of the great floor traders of all time. He traded corn, wheat, and soybeans on the Chicago Board of Trade. Brilliant man, wonderful, wonderful professor, for lack of a better term. And Pete that was one of the lines Pete taught me. Try to do the hard trade. If it's easy to buy, it's probably wrong. If it's hard to buy, it's probably the right thing to do. So I think it's one of the great statements. It ranks up there with markets remaining illogical.
Yeah.
My favorite rule is to be quite honest, is that there's never just one one
Cockroach.
oh, come on. Yeah. What was it?
One cockroach. There's never just
There's
one
no,
cockroach.
yes, there's never just one cockroach, i.e., when bad news comes out, more bad news follows. When good news comes, and it's usually that way. When bad news comes out, more bad news is going to follow. When a company comes out with bad earnings, more bad earnings are going to follow behind. When a chief financial officer resigns his position and says he wants to spend more time with his family, you can rest assured that bad earnings are coming. So that's my favorite rule. Things get on the downside, things really get ugly. So if you see bad news, there's usually going to be more bad news to follow. There's never just one cockroach.
Okay, so you've mentioned a couple of times that you think the stock market is a little overvalued right now, or at least overbought.
Yeah, I do think it is.
So I was just wondering, let's talk a little bit about what the current state of the markets. It sounds like you're still following it. Sounds like you're still trading, if I'm not mistaken. What do you think's happening, and what do you kind of forecast for the next little while?
Well, first of all, I think today is a very important day. Here's December 9th, and I tend to look at charts before I look at fundamentals, and fundamentals always follow the chart pattern. They evolve later. But you've got what's tracing out on the charts on the NASDAQ, which has been the leader to the upside. Everybody's wanted to buy tech. I have a hard time understanding why Grubhub is a tech stock. I'm having a hard time understanding why Etsy is a tech stock. I'm having a hard time trying to understand why any of these food delivery services are called tech stocks, but nonetheless, their tech has led the market higher. And you're doing something today that we haven't seen happen in over a year now. For the technicians out there, it's called an outside reversal day. We went to new highs, and we're closing right now. It's late in the day. There's still time for it to change and turn the other direction, but we're below the previous day's low. We've opened at new highs. We're lower on the day. We're below the previous day's low. And if we close below the previous day's low, that's called an outside reversal day. And that's usually indicative of a market that follows through on the downside for quite a period of time. So I think that stocks have gotten a little ahead of themselves for a number of reasons. Why has the bull market occurred given the pandemic? Because every central bank around the world, whether it's the Fed, whether it's the Bank of Canada, whether it's the ECB, whether it's the Bank of England, whether it's the People's Bank of China, the Bank of Russia, the Reserve Bank of Australia, the Reserve Bank of New Zealand, they're all doing exactly the same thing. They're all being monetarily expansionary and force-feeding reserves into the system. And given the fact that the economies are rebounding, but they're clearly nowhere near where they were before the pandemic struck last January, or perhaps some are even saying that the pandemic began as late as the autumn of 2019. All that money that would normally go into plant and equipment and labor has made its way into the equities markets. I think it's probably overextended on the upside and probably ill-advised. As I said, I haven't seen insider selling this aggressive in years, nor have I seen public buying this aggressively in years. And again, as I said earlier, when the public buys and the insiders are selling, it usually doesn't fare well for the public. But what has driven it higher? Central bank policies. No ifs, ands, or buts about it. Every central bank of consequence has been expansionary, and they're going to continue to be expansionary. So I do think that means that we're going to see a resurgence of inflation over the course of the next 4 or 5 years. The monetary authorities are going to keep the overnight Fed funds rate. The Fed will keep the overnight Fed funds rate at or near zero for the next 2 or 3 years. But the implications of the huge influx of money into the system, which has made its way into the equities market, will eventually find its way into wages, will eventually find its way into plant and equipment, and will eventually be deleterious to share prices. So that's what's driven stock prices higher. Monetary expansionary circumstances everywhere, even, whether it's socialist countries or free market to capitalist countries. All the monetary authorities have done exactly the same thing and will continue to follow that same path.
So let's talk a little bit about what will happen if they follow that same path. And you mentioned that the Fed and other central banks will keep the short end pinned. Do you foresee a situation where the long end starts to get away from them and actually starts rising as we get the inflation? And if so, do you think they're going to go into yield curve control?
I think they're going to be into yield curve control sooner rather than later, and I think it will get away from them. I think the long end The 30-year bond right now is about a 162, 165 yield. 2 years from now, 3 years from now, that'll be at 3% or higher. And as we talked earlier, we have to people your age, that seems like a big move up in rates. But as we talked earlier, remember in 1982-83, the 30-year bond had a 14.25% coupon. My first mortgage here in the United States, when we built our house 25 years ago, I think it was 9.25%. Now my daughter just bought a house and they got a mortgage at 3%. The rates are incredibly low and are not sustainable at these levels, especially at the long end of the curve. So I think the curve widens dramatically. I think that the monetary authorities will do what they can to try to ameliorate that widening of the curve, but the curve is going to widen. The overnight Fed funds rate will stay at zero at least for 2 more years. The Fed has promised that. But the back end of the curve, can I see the 30-year at a 3% coupon and the 3% yield in 2 or 3 years? Absolutely. Who benefits from that? Banks.
Okay. So you don't think that, like some of the bond bulls will argue that even before we get to 3%, the Fed will step in there just like Japan did and actually peg part of the curve. You don't think that that's going to occur? You think it'll be more them just kind of trying to support it through more quantitative easing as opposed to actually pegging?
I don't think there's any question but that the Fed will be in there buying the long end of the curve when rates go higher. And for those 3 days, 5 days, 2 weeks, a month, bond yields will decline. But I think what we're seeing now is a turning point at the long end. The fact that here we are above 1.5%. It wasn't that long ago that we were at 1.25%. Here we are at 1.62 or 6.3 or 6.4%. And I think it's only a matter of time until we get to 2%. They'll fight that. They'll fight it. It'll go to 2.25. They'll fight it. It'll go to 2.5. They'll fight it. It'll go to 3, and they'll fight it.
And do you think there's any ramifications in terms of people's portfolios? Like one of the things that I worry about is that people have never experienced actually losing money in bonds. It's been almost 40 years of it winning kind of more often than not. And I worry about people when they start to see their bond portfolio actually go down in value, they'll be surprised to learn that, yes, you can lose money in bonds.
We forget that without getting too esoteric about the bond market, but and getting into the math of the bond market, a 1% or a 1 basis point move in yield when you're at 14.25 is one thing. A 1 basis point move in yield when you're at 1.65% is completely another. The value of an 0.1, the manner in which the corpus of the value of your bond position shall decline as rates go up 2, 3, 4, 5, 6, 8, 10, 12 basis points is demonstrably different now than it was when yields were at 14.25. And people won't understand that. They will not. It will shock them when they check their monthly statements and see that they were in bonds and they thought that their bond portfolio was holding steady, and in fact it's declined by 10%. So I think that's going to be the great surprise in the next 3, 4, 5, 6 years.
And do you think once that happens, do they go out and buy the stocks that hurt, like when you drop them on your foot, or where does that money go?
That's a good question, and I wish I had an answer, Kevin. I don't know.
Okay, and one of the arguments that I've heard kind of postulated out there in terms of if everyone's holding their short ends at zero, it'll actually, some of these imbalances will be offset in the currency market more so than before. You know, in the old days when I first started reading your letter, it used to be that the Bank of Japan was in there intervening. There was exciting stuff in currency. It seems like currency has gotten boring. Do you think that's going to change in the next decade?
If I've learned anything in the markets, is that the pendulum swings. So 25 and 30 years ago, foreign exchange was the place to be. That was the cool job on the street, being a Forex dealer.
Right.
There aren't any Forex dealers around anymore. The Forex market has become, as you just mentioned, almost non-existent. Nobody pays attention. It's a third-tier operation in at most banks. It used to be the first-tier operation. Do I think that'll change? There's no question. Will it change overnight? No, it'll change slowly. And there will be a time 20 years from now when foreign exchange trading will once again be the hot and interesting place to be. I think it's fascinating in the course of the past 2 weeks or 3 weeks or so that the U.S. dollar has gotten as weak as it has, and the Canadian dollar has gotten as strong as it has. I mean, people take a look at and say the dollar has gotten weak because the euro has gotten close to 121, but the strength of the euro has been far eclipsed by the strength in the Canadian dollar and the Australian dollar. That's, to me, the better places to have been. And quite honestly, I'm somewhat surprised by it, but it's what's going on.
Do you think that's a function of people trying to get ahead of the new reflation that they see on the horizon?
I think there's twofold. I think it's confusion over what's happening geopolitically here in the United States. And if you're a large portfolio manager and you have to have a foreign exchange position to begin with, and you have a choice in North America, at the margin, you'll move your money to Canada. At the margin, you'll move your money out of the United States until this presidential election has clarified itself and Mr. Biden has become president and the Republicans control the Senate and gridlock is a given. Then the money will flow back at the margin out of Canada back to the United States. But right now, I think it's implications of rising commodity prices and geopolitical or domestic political circumstances that are driving the U.S. dollar down and the Canadian and Australian dollars higher.
Do you worry about the president kind of transfer not going smoothly, or that it's not over, or do you think that's a done deal?
It's over.
Okay.
I voted for the guy. My wife is a huge fan of Mr. Trump. I am a bear. It was hard for me to pull the trigger to vote for him because I took such great pains to argue with his positions on trade, which I thought was absolutely archly stupid. Putting tariffs on steel and whatever coming from our greatest ally, Canada, made absolutely no sense to me. Never shall make sense to me. Didn't make sense to me then, and won't make sense to me in the future. But I think that I think that when push comes to constitutional shove, Mr. Trump will stand down as he should do. The transition will be amenable. The Republicans will have control of the Senate. The Democrats will have control of the House. Gridlock will be upon us. And I love gridlock because, as I've always said, I love gridlock because they can't reach any decision and they can't hurt me.
Right. So over the past kind of 20 years, I guess ever since China joined the WTO, we've had this wrath of globalization. And you just mentioned that you're a staunch free trader by the sounds of things. One of the things that actually has done is been also a disinflationary force as we do more free trading. It's caused that. Although I might agree with you on the fact that you should never be taxing your great neighbors to the north, I'm wondering, do you feel the same way in terms of China and all the other things? And if not, do you think that if you do believe that we are about to enter into a period of deglobalization in reverse, is that also another factor you think will push up inflation in the coming years?
One of the great things that happened in the past 20 years is the modernization of China, no question. Now let's be blunt. China cheats. There are no ifs, ands, or buts about it. They are not Germany. They are not France. They are not Canada. They are not Australia. They are not New Zealand. They're not even Brazil or Ecuador. China cheats. And sometimes you have to keep your eye on what China does. But the best thing that's happened from China is the amounts of new labor that came into the global market. And that's what put downward pressure upon wages. That's what, in my mind, that's what put downward pressure upon inflation, was the advent or the bringing into the global market Chinese labor.
Right. That's
going to change. The problem with China, the problem that China has and the problem that China doesn't know how to deal with is the fact that, one, its population is soon about to decline. It's going to follow the lead that Japan has. It's getting old and it's going to get smaller. And the numbers of employers, the amount of labor that China was able to inject into the world market is going to cease in another year or two. And it's going to move in the other direction. And suddenly labor is going to become far tighter than anybody anticipates. Demographics drive prices. And the demographics of the next 10 years are basically for populations in the West and in China and in Japan to get smaller and older. And that ain't good. And that's going to be inflationary.
One of you mentioned Japan there, and going back to the Plaza Accord, there was a lot of pressure on Japan to revalue the yen higher. And I guess you could make comparisons to modern day China in terms of the China kept their currency pegged lower, they grew more, and now there might be pressure for them to allow it to rise. Could you foresee a situation where, just like Japan, a situation where a stronger renminbi actually fuels an asset bubble in that country?
It's very possible. I think it's quite probable. Certainly, it's possible. I do think it's probable. The argument that is being made is that will the Chinese renminbi offset or outseat the United States dollar as the world's reserve currency? And the answer is that's possible in 100 years. I'll be dead long before then. Right. You'll be dead long before then. It's possible in 100 years that the renminbi will be the world's reserve currency. But you have to understand one thing. Reserve currency status always goes to the country that is the strongest military power. And most importantly, it always goes to the nation that is the strongest naval power. Nobody comes close to the United States. Nobody comes anywhere close. As I like to say, we have 11 aircraft carriers, and aircraft carriers are not as important now as they used to be because they're now far more indefensible given the sophistication of international or of guided missile attacks, for example, and basically technological attacks upon them. But we still have 11 aircraft carriers. China has 1.5. Italy has 2. They actually have more than almost any. Italy has 2 and England has 2. So I'm not worried about England or Italy becoming usurping American military and naval prowess around the world. Will China eventually become rather than being what is always referred to as a littoral naval power, become a blue water naval power in 100 years? But there's other things that they have to take care of. So we shall be, and for the long foreseeable future, we'll be the dominant military power. And as long as we are, we will be the world's reserve currency. Always has been that way. Always will be that way.
Yeah, so I completely agree, Dennis. I don't think there's a chance. When these people start telling me that America is going to lose its reserve currency status, I say that takes decades upon decades. It'll be a slow-moving process, and it's not happening anytime soon. Having said that, the Japanese yen still rallied significantly in the 80s, and it wasn't the reserve currency. And I worry. I think if I remember right, you used to argue that be careful about letting the renminbi float freely. You might just find that it rises instead of going down. Am I mistaken that was your kind of line?
I used that line many times. I would quote H.L. Mencken, who always said, "Be careful what you ask for, because you just might get it good and hard." I think the Chinese are going to have to worry about the fact that the renminbi is going to get stronger, not weaker. I think the United States. I think Mr. Trump was ill-advised when he argued that the Chinese. I mean, he argued that the Chinese were devaluing the renminbi when the renminbi was actually rising in price. He got it completely wrong, and the Chinese are going to get it wrong. China has to understand that it's going to eventually cease being an exporting country and will certainly become an importing country as its wealth increases, as per capita incomes go up, and the Chinese people want washing machines and drapes and better automobiles and put their kids to school, and they will be an importer just like we have become.
So I see Ray Dalio's out saying that you should buy the Chinese bond market. It's one of the few bond markets that offers a positive real yield. Everybody else is firmly in the negative territory. And he even argued that you should own the stocks. Would you agree with him?
Ray's smarter than I am. I on that, Kevin, I will defer. I'll just I'll stand down.
So what when you think about the coming years with Biden, do you think that it's going to be a return to the Obama administration of more globalization, or do you think that boat has sailed?
No, that boat hasn't sailed. The globalization has been the order of the last 25 years. It will be the order of the next 150 years. And the Trump administration, as we became more national oriented, will prove to be an aberration. The globalization is given the advent of computers around the world, given the better transportation around the world, given the freedoms around the world, globalization is the future, not the past. The pandemic and the Trump administration have been an aberration an aberrant circumstance of 4 years and a year of pandemic that will prove transitory in nature.
That's what I like about you, Dennis. You're not afraid to say the exact opposite of what everyone else believes. That's some great insight. Listen, we're getting close to being tight for time here. So before I let you go, you've had, as I mentioned, a long storied career in the markets. And I was just wondering if you were to talk to the Dennis Gartman that was starting his letter in 1984, what advice would you give him?
Embrace technology quicker. Learn how to use a computer properly. Really, I would say embrace technology quicker. I didn't embrace it as quickly as I should have. Like I said, I think I was the first e-business and didn't know it, but I didn't expand upon that. And I still don't have a Facebook account. I still don't have. I still don't tweet. I have a hard time doing Skype. So that would be my line to Dennis Gartman of 30 years ago. Hey, idiot, embrace the technology.
Okay, and so my last question for you before I let you go is, if a young person was coming and is interested in the markets, what advice would you give them specifically about how to get in the markets or what they should study and how they would go about doing it?
What should they study? That's probably the best question.
Okay.
The first thing they should read is Reminiscence. The best book of all is Reminiscences of a Stock Operator by Jesse Livermore, written at the turn of the century, I think it came out in 1903 or 1905 or something. But read Reminiscences of a Stock Operator at least 3 times, underline it, then read it again after 6 months. Read as much as you can. Read the Wall Street Journal. Especially read the editorial page, the editorial page and the page just in front of the editorial page. Make sure you read that and read the front page. Read the Financial Times of London. It's the best newspaper in the world, even if here in North America. Read the hard copy of it. Don't read it on the web. Get a hard copy of the pink Financial Times. Even if you get it 2 days late, you're going to be a week ahead of everybody else. Read, and read. Study history, study politics, study military, and that's what I would tell them. Well, that's my story, and I'm sticking with it.
Okay. Well, Dennis, one last time, I truly want to say thank you for your letter. I was telling my wife that I got to interview you, and she saw the big grin on my face, and it's really been one of the highlights. And for a young kid that was just learning about this business, you were an inspiration. Actually, my letter is kind of my version of what you did. And so just for a big, huge, heartfelt thanks for all of your work throughout the years, and it was a real pleasure having you on today.
Kevin, it was my honor. Well done. Thank you for your time. Call on me anytime. Happy to be of what modicum of service I can be as I age past 70 years old.
All the best. Thanks, Dennis.
Cheers. Be well. God bless.
All right. So joining us for our second guest is Dave Floyd, founder of Aspen Trading Group. How you doing, Dave?
Fantastic. How are you guys doing today?
Oh, we're doing great. It's been a year since we had you on the show. Actually, I think it was like December 7th of 2019 when you were our guest on the show. And we were saying
the Christmas special.
It was and we were saying that you were going to eventually come down into Toronto and we were going to get together for a Market Huddle meetup. And then COVID just ruined everything, right?
It did. It even ruined my plans to go up to the Gulf Islands this summer. I mean, I can't go to Canada. It sucks.
Yeah. Oh, you know what? We're still waiting for a rain check here. We'll certainly, once everything reopens, we'll have to get together for a pint. Nonetheless, yes. We welcomed you here to be a part of our Talking Charts segment, and we're going to get lots of insights from you on all sorts of different things. But we're going to follow our initial way that we start the Talking Charts segment. And what we're going to start with is, Kev, we're going to review what we were looking at last week. And last week, just quickly, we were looking at asking the question whether the VIX was going to drop below the 20 handle, and that just didn't happen, right?
Yeah, you goochered it. That was yours, I think.
Well, why? Were you short vol?
No, but
Okay.
it definitely won't happen when you bring it up. And in fact, it went out bid at the end of the day here.
There you go. And so the other big thing was we were asking whether natural gas was actually going to put in a bottom, and well, it did. Right?
Yeah, you actually got that one right. Very well done.
Well, it wasn't me that we were looking to see whether that was going to play out, but this is looking at that Jan contract, and we did get that bounce off of that low. Actually, Dave, are you at all tracking nat gas, or is that something that you keep an eye on? Or
I'm actually not, but the chart looks quite interesting. That's some pretty bullish action off of the lows there. I do follow the VIX quite a bit, but natural gas. I look at it, but I don't do much with it.
So let's go back to the VIX then.
Yeah,
what do you think here?
Yeah.
Well, I mean, the VIX is that you've got to be, your timing has to be impeccable, as you can see by the chart here. I guess if you're looking to be long vol, it's anybody's guess when things will go awry. I do think the price action off the lows this week is fairly constructive. I think if we can hold above 23.77, I've got that as a level that might sustain a move higher. But your timing just has to be so good. And I think with coming into the end of the year with such a bullish tape, it might be a stretch to expect much from the VIX. But maybe it might be a trade that'll be better suited towards the beginning of the year.
For sure. And so the last thing we were talking about was whether or not the bond market was inevitably going to break the stock market. And, we certainly saw bond yields edging higher. I know that you, Dave, you watched the 10-year a bit, but really nothing's happened that much in the bond market, but the stock market certainly did pause. I don't know whether I want to say it's the beginning of a market correction or not yet, but we certainly has stopped its advance and giving a little bit back. But the yields have relatively stayed flat here this past week, and the stock market had a little bit of a pullback here off of its high, but nothing to really write home about. What levels are you watching here on an intraday basis, Dave?
Well, on the S&Ps, let me pull that one up. I had a 10-year note chart up here, but let me pull up the S&Ps on my end real quick.
Well, listen, you want to talk 10-year note first?
Yeah, I just pulled up S&Ps. It's totally fine. We can circle back to that. As we were talking about prior to coming on, I mean, I'm looking at key levels on the S&Ps, but when I go to the S&Ps, I'm trading them on an intraday basis. I'm not trying to make any grandiose forecasts in the futures markets. But for me, the fact that we had a real tough time down at that 36.35 support level today, I thought was interesting. Now, we came back through it, traded right back into a resistance level I've been looking at all week, which is, it was support originally. Now it's resistance at 36.53. But again, I'm not trying to make a grand forecast here. That, to me, looking at your chart right here, it's the 1-hour chart off the week highs. That doesn't look terribly impulsive to me off of the highs. So it's hard for me to say, we've got a weak tape here. I'm just taking it day by day. Whatever's happening on an intraday basis, I'm going with. But what I'm doing is I'm using some of these levels that take into account, kind of footprints of where price action was really sticky. That's how I'm queuing my trades on an intraday basis.
Yeah, so I put it here down to a 4-hour chart. And the one observation I make is that throughout almost all of November, every time the market paused, it did one of these pullbacks, one of these 100 some odd S&P point throwbacks. It is just the market giving back a little bit of its gain. And each time the bulls would always come back and buy the dip. And I don't think there's any price action yet that has really broken the back of the bulls that really has engaged the sell cycle. So it'll be really interesting to see whether the bulls buy the dip off of here. I know, Kev, that your bearish spidey senses are tingling, are they not?
They are. Although I am that fat Spider-Man that you see in the pictures all the time. So, the one that works down at Times Square, that's let himself go a little bit. That's me. So that my spidey senses don't always work quite as well as I'd hoped.
All right. Well, listen, let's quickly go through the top 3 things we're watching next week, and then we're going to get to just freestyling some charts. So the first thing, Kev, I wanted to talk about, you were saying that there's a lineup of central banks talking next week. Is there anyone that you're particularly focusing on?
Well, the Fed's the big one, right?
Yeah.
So we have that one. Bank of England is in there as well, which might mean with this weekend's Brexit kind of looming large, maybe that'll mean more. But the Fed is going to be everything. I don't know if it actually will be something that the market really moves on that hard. But, you have to be careful because let's face it, from a human point of view, things aren't going well. Sure, maybe the economy, the macro numbers are looking great, but I don't know if that's what's really driving Jerome and all the rest of the FOMC crew. And so what I worry about is that they might surprise people and be a little more bullish or dovish than you expect.
All right. Well, I think that's a good segue into actually number 2, because we already touched on this, and maybe Dave, you can even give us your intuition. I know you're saying you don't really look at it too big picture, but what to me, this entire market pullback has got the characteristics of a pause. But what's interesting is with us having all the vaccine rollouts, having the Fed next week, having a quad witching, which we're going to talk about in a moment, all of these different things coming through, I actually my intuition is that the market first goes up, fakes everyone out with an upside move, and then maybe a bigger correction comes on the other side of that afterwards. What do you think of that idea, Kev?
Well, I don't know, but you were going to ask the guest there.
Well, we're gonna get to Dave, but I just wanted to get your call on it.
Putting
first.
me on the spot, I was expecting you to ask Dave. So, Patrick, I originally had thought that we were going to top on expiry. I had, bought into your narrative that it was going to coincide with the vaccine rollout, expiry. A lot of things are going to come together. The fact that we had Tesla, and I am also ruining our number one. But I kind of have recently gotten a little more worried, and I look at this action, and I feel like today, we're taping this on the Friday, I feel like today's tape was really heavy and that it wasn't behaving that well. And I've been reducing risk over the past couple of days. It might end up being that this was the boy who cried wolf and we'll rock it on next week. But I kind of think back and I remember getting bullish and everyone telling me what an idiot I am. And now nobody's telling me I'm an idiot. And so I figure I better do something that where I get people telling me I'm an idiot. So for me, that's kind of going to the sidelines here while everyone else tells me that it's safe and there's no issues and that everything we're going to rock higher. That's when my spidey sense starts tingling and I start heading to the sidelines.
So let's put Dave on the spot now. Dave, you've already numerous times said that you're not making these big grandiose market calls, but I want one. What's your intuition here? Do you think the market still has enough gas in the tank for another push higher, or do you think that this correction can turn into something bigger?
Well, it potentially could. Let me clarify something. When I'm doing more of the intraday trading, of course, you kind of have to be trading in the moment and trading what's happening as opposed to forecasting, because there's no room for that in that time frame. I have an opinion on let's say on the dollar that I know we're going to talk about in a little bit, but I have to be cognizant of what's happening overall. And there's definitely how I temper my shorter term views with some longer term stuff is looking at some quantitative data just to kind of get a sense of, what's happened historically when these particular things have happened. So it's funny you're asking this question, because one of the pieces of data that came across my desk this week, and it's from a colleague of mine over at Nautilus Capital, when the NASDAQ has doubled, which it has from the 2018 December low, forward returns, or, historically when it's doubled, and it just recently doubled off the 2018 low, 3-month losses average about 3.5% historically. And there's been 4 instances of that, and all 4 have been down 3 months later. So, but you contrast that with where copper prices are going, which are straight up. So you have what I think is probably going to be just a pause. It doesn't look as though, to me, based on how I look at the market technically and some of the quantitative data that I look at, it looks like there's room for some softness, but it's probably just that, probably just a bout of softness before we continue to move higher. And I just keep that in the back of my mind so that I'm not completely surprised by anything. But I also don't take that with me each day and go, okay, we're going lower today, because I'm not really interested in trying to make those turning point calls, but I want to be aware of it.
Right. And so our number one thing to watch is, we're going next week into quad witching and the Tesla inclusion into the index. And so what we were watching here, how are things going to roll into that quad witching? And more importantly, does Tesla have a buy the rumor, sell on the news event on that? So, Kev, do you have let's start with you, Kev. Do you have any insights?
So I think that it's going to be a wild day. And keep your calendars clear because there's going to be a lot of action. One of the things that people need to realize is that this is an unusual event in that Tesla is going into the index as the 10th biggest stock, or I don't know, it might even be higher now. And in doing so, to make room for it, to pay for that inclusion, all the indexers are going to need to sell the actual underlying other 499 stocks. So I think you could see a lot of action in terms of the market being weak. I also think that everybody is trading Tesla. Everybody is long. It wouldn't surprise me at all if the actual day you see Tesla going out at the lows and going into the index on the lows of that day. It just seems to me it's one of these things that everyone is already set up for. The other kind of wild card is, we just had Elon move to Texas, a lower tax state. Maybe he just fills it, right? He's got 170 million shares. One of my friends jokes and says, wouldn't it be hilarious if he just fills the entire index order and says, sold to you, and walks away the world's richest man or the world's second richest man and just kind of retires?
Now you're truly speculating, right?
Yeah, of course that's not going to happen. But listen, it's going to be a wild day. Make sure you keep your calendar open because a lot of things are going to happen. Make sure you understand that all of the other stocks are going to be for sale. And the interesting thing about this is that there is actually an advisory committee to the S&P Index Committee. So the Index Committee is the kind of the people that work at S&P, at Standard & Poor's, that are in charge of deciding how the index works, what stocks go in, when they go in, all that kind of jazz. Well, there's also an advisory committee, and this advisory committee is made up of dealers that use it, like the derivative market, and underlying clients who use it as an index, like for their index funds. And these are some of the biggest users, the ones that are paying S&P all this money. Well, S&P said, can you give us your opinion about how this is going to go in? Because this is big. And the advisory committee came back and they had been given two options. One of which was, we're just going to put it in one day. And the second one was, we're going to put it in under 2 days. So they're going to split it up. Maybe it'll be the third Friday of December and then the second Friday of December. So you split it up in half so that all the flows aren't on one day. Well, the advisory committee came back and said, we not only do we not want to do it on one day, we actually want to do it on 2 days that are even farther apart. So they suggested we do half on this December expiry and the other half on the March expiry. Well, what's interesting is that S&P said, gave them the middle finger and said, screw you guys, it's all going in one shot. So here you have the biggest users of the product saying, no, that's not the right way to do it. We're scared that there's not going to be the liquidity needed. And they weren't as scared about the Tesla piece. They were actually more scared about the stock market piece. Really? So we'll see. It could be that this story's out there amongst the kind of the index community. A lot of people know it. They might be setting up in place. But this also might be a reason why you might see next week being weaker than people anticipate as those large sales start coming to fruition. And you have to remember one thing: as we get closer to the index date, you'll find that people will accelerate. It's almost on an exponential scale. If you're sitting there and you're benched to the S&P 500, you may not want to do anything today because, let's face it, a lot can happen in a week. But come Thursday or even Wednesday, you might start picking away, start selling some stuff because you know that in 2 days' time it's going to be really for sale as everyone leans hard on the sell button.
You know what was interesting though, Kev? Before we bring this over to Dave, I wanted to just point out, like, remember when we had Brent from Spot Gamma on? It was he was talking about how huge that December expiry was, because so many people, even earlier in the year, were hedging over the elections by opening so much tail risk in insurance out into that December expiration, and even today we have like this golf ball in the garden hose at the 3,700 strike. I have the Spot Gamma stuff right here on the thing where there's that huge open interest going into December, and there's going to be a huge Gamma roll off up there. I don't know. It's definitely going to be something going into Friday. Now, Dave, I was going to ask you, like you always look at this from a day trading perspective. Do you generally try not to trade during the option expirations because of that crazy volatility, less orderly, or do you find that there's some big opportunities from that perspective?
No, it doesn't negatively impact me. Oftentimes, it does create an opportunity. You know, from an intraday perspective, the thing that's the worst is kind of getting the tape bombs, like on the ongoing bailout, not the bailouts, but the COVID relief packages. Those to me are more challenging. But the option stuff doesn't necessarily pose that risk. I think what Kevin was talking about in terms of the Tesla inclusion is really interesting. I hadn't really hadn't heard about all that information, and I think given how large indexation is now as a as a structural component of the marketplace, it is going to be really fascinating. Maybe it'll be smooth. Who knows? But
yeah,
you bring up some really good points, Kevin, about maybe right into the. Is it going in next Friday? Is that what you'd said?
That's right. Friday's close will be the day.
So
They actually technically call it'll be in the index on the 21st, but it's based upon the close of Friday. So all the action is Friday night, or like at the close, the 4 o'clock price.
So I mean, I get your point about maybe Thursday and Friday being fairly weak when you think about all the other index funds and or index managers and drag that have to adjust accordingly. So. It's going to be very interesting next week with regards to that, but not for me at least. Not the options expiration doesn't do a whole lot for me in terms of keeping me on the sidelines.
All right, Dave. Let's get talking some charts, because I know that you're a currency guy, and well, you know what, this dollar index, it's been dogging it on the downside, but your spidey senses are telling you that a bottom is near.
Well, potentially. I don't have any real skin in the game. I've got a small short in the Kiwi dollar and a small short in the euro, but not positions that reflect my view. I'm just kind of nibbling at the periphery. But the main thing for me is that it just seems like everybody and their uncle is talking about, again, the demise of the dollar, the weakness of the dollar. There was a recent graphic I came across which showed the net positioning of asset managers, not commercial hedgers or anything like that, but just asset managers that were short the dollar. And relative to where the dollar had moved lower versus or relative to the size of the position, it kind of struck me as that's way too many people leaning in one direction, and yet the market's not really moving lower in that same degree, or it's not moving lower in the same magnitude. So I think, for me, I think the surprise trade is being short the euro, the surprise in a good way. I mean, how much? I mean, of course, could the euro go to 123? Yeah, of course it could. But I think I'd rather be short the euro here than try to be long and try to grab that next 1% up when I think there could be a 3 or 4% move to the downside. And I think the only way we're going to get some clarity on that, we've got to kind of get this dollar index to sustain itself right around the 91.61 level. If we can hold above there, I think we got a chance to kind of gravitate into year end towards the upside. Conversely, if we're looking at the euro, the level I'm looking at there, let me just pull it up on my chart real quick. I'd like to see prices get and hold below 120.90. And if that's the case, I think we go all the way back to 119.60, maybe even down to 119, but it may not be a straight shot, but it could be a pretty quick move too, because I do believe that people are very positioned short the dollar, and that could work to the bull's advantage if that position gets unwound.
Yeah, I have to I agree with you that the sentiment is definitely incredibly crowded. But, when I look at that dollar index on like a weekly chart, there was that 2018 low. And it, like you were saying, that euro could go to 123. It really does feel like a test down into like the 89 level on the dollar index could happen, but it seems so consensus, right? And that's what makes it so hard to stay with the trade. On the downside is like at some point you know that there's going to be a shift, and when this thing snaps the other way, the squeeze can be quite meaningful, and that's when Kevin pulls out his tickets. You like the fading that sentiment, right, Kev? Are you toying with this at all?
Well, it's funny that you actually came up with this, Dave, because I just wrote today, and it just proves that Patrick doesn't read my stuff. That I was actually covering. I've been short the dollar forever. People have been telling me that the dollar was oversold and that there was too many speculators short for the past, I don't know, 3 months. And I kept telling them, no, the reality is that although the speculators are short, the long-term money is way, way over own the dollar. Like, I think they just own way too much. Like, if you think about like a European pension plan manager, he has had to own U.S. stocks because they've been the only game in town. They've won both in terms of outperforming the European index, but also with the dollar. The dollar's been outperforming versus the euro. So when you think about long-term money, they're just starting to sell. And I think that's what we've been seeing as them selling. Now, having said that, I don't know. As I said, I got nervous about a bunch of things today. I think we're getting towards the end of the year. Some funky things can happen. I looked at it in the past when I was telling people I was short the dollar. Everybody told me, you're wrong. We're going to get a rally and stuff like that. It seems like even the U.S. dollar bulls have given up now. And so I'm completely in Dave's boat, and it's actually quite heartening for me to see that he's seen the same thing from a technical basis. And so maybe I'm a technician at heart. I just don't know it.
I used to trade with the guy when I first get into the business. He was a little color on this. This guy was a former card counter in Vegas. He actually worked with Blair Hull of Hull Trading, which most of us have probably heard of if you've been in the industry for a long enough time. And he became a trader after, card counting in Vegas became difficult because of, the technology and whatnot. But that's how he made his living for a while. So this guy was a really fantastic trader. What he didn't realize was that he truly was a technician. He said, "Oh, charts, who needs those?" And he always made the joke, what's at the bottom? What's at the bottom of the ocean? And it was like a ship with a chart in it. And but yet, when I watched him trade on an intraday basis, his charts were in his head. He was watching that tape so closely. He was just doing a kind of a visual representation of a chart. But I don't know where I was going with that, but
no, but that's a great story, and I do love that quote. Although the thing that all the technicians will retort is that every ship at the bottom of the ocean has a captain who didn't follow their charts.
Oh, exactly.
Right.
Exactly.
So the question is, was the captain following his charts when he ran up on the shoal or not?
Yeah. The one thing I'll say, at least in terms of this dollar index trade, well, actually in any trade where you're kind of looking at an inflection point, like I said, I'm nibbling at the periphery. What I mean by that is I have a small position in terms of being short euro and Kiwi. On a day trading perspective, as well as on a swing trading perspective, I'm always of the belief that I want the market to kind of tip its hand to me first. I'm not smart enough or smart enough to think that I can call a turning point. I can get, like you guys are talking, a spidey sense or a hunch that, hey, maybe this thing's overcooked. But until we get above certain levels and the price action looks impulsive, for me, it's just a casual observation and having a little bit of an iron in the fire just in case things take off. At least I got a favorable entry point, and then I'll build up my position as things move. I don't find anything wrong with that. Yeah, you maybe missed the optimal entry point, but you're going to be right a little bit more often than you are wrong. And usually, if you keep getting keep getting chopped up trying to pick a top or a bottom, by the time the move actually shows up, you're beaten down and you don't trust your gut anymore. So you end up missing on it. So
Can I ask what you see in the Kiwi, like the New Zealand dollar, why you're choosing that to express your view about the U.S. dollar? Like,
Well, yeah, I mean, it doesn't, obviously the Kiwi is not going to move with the dollar index quite as much. For me, given where we're at with the S&Ps and we could be a little bit weak in the near term, that's going to be more like if we get the S&Ps to drop off a decent amount over the next couple of weeks, the Kiwi dollar goes with it, given the fact that it's had a big run up. And that's typically the tendency anyways. If we also get the dollar index to rally at the same time, which would make sense, dollar index rallies, S&Ps go down, that would be kind of a double whammy on the Kiwi dollar. Naturally, I don't need the S&Ps for the euro to go lower. I just need the dollar index to go higher. So the Kiwi's a harder trade because it's just been a complete bull to the upside. But if those two things come together, I think we can get it to move lower.
And why the Kiwi over Australia? Like that, those two usually move together. It's just interesting because most people, like, that's an unusual pair to trade. I was just wondering, what is it? Just something that you like, that you watch and you have a feel for?
I do. I trade the New Zealand dollar as well as the Australian dollar quite a bit, and for me, it was just the magnitude of the move higher. I mean, you could make the argument with the Aussie dollar. I don't think you'd be in any other. Let me rephrase that. I think you could make the same trade in the Aussie dollar with the same, reasoning as I'm making for the New Zealand dollar. The only other thing that maybe might make the Aussie dollar a touch firmer and is that the copper prices, they're very, very firm, and there tends to be a correlation between Aussie dollar and copper prices. So again, not to say that Aussie dollar won't move lower, but I chose Kiwi based on what I was seeing at that time, and it's kind of keeping an eye on copper prices. But I think you could make the same argument with Aussie dollar as well.
And so in terms of, like, it is hitting new highs, so how do you as a technician get a feel for when it's time to be watching that, for that trend to stop occurring? And, like, is this a function of the rate of rising is going down? Is that what you're noticing on that?
Well, the trade like the Kiwi dollar and the euro, those are not, I don't usually do those trades very often. They come around once or twice a year. Most of the stuff I'm usually doing is buying pullbacks within a trend and, or selling a rally within a downtrend. That's typically the way I approach things. But every once in a while, you'll get the market at levels that just seems as though it's due for a pause.
Okay.
And again, it hasn't played out yet, but when you get factors like the sentiment and the dollar index, some of the forward returns in the NASDAQ and the S&Ps, given some of the quantitative data, that's when I can start looking at that and saying, as opposed to just saying, oh, that's ran too far and making an arbitrary assumption. Now I'm assigning some data points that actually could contribute to that move turning low, or towards that trend starting to turn a little bit.
Right. So this isn't your bread and butter trade.
No,
it's just the fact that because the dollar is so overextended and because you're not comfortable going with those moves at the current time, you're kind of dipping your toe in, looking for that trend to change. But usually you are actually trying to buy pullbacks or retracements in a trend, in the direction of the trend, as opposed to looking for that trend to change.
Oh, absolutely. I am definitely not a counter trend trader. I like to be, it just makes my life easier. I mean, it's for my psyche, it just works better.
Well, we have to talk about the Freeport McMoran then, because you've been pressing copper, and and you're staying with this trend, right?
I am, and again, this is quantitative data, and it's also just the trend is your friend. And I know that sounds like an overly simplistic view, but I mean, let's be honest. You could have made the argument back, it looks like at the end of September. Oh, that's too far. Well, it went up another, Freeport McMoran went up another $8, $8 or $9. Some quantitative data, though, at least in terms of copper, and I always look at copper and I trade FCX as my proxy for copper versus copper futures. What's happening in copper right now is really quite interesting. We've, where is it right here? I'm just looking up the data point because I don't know it off the top of my head. Give me 2 seconds here. Yeah, we've had 6 weekly closes, 6 closes. Let me say this again: 6 higher closes each week in copper, and obviously with each week closing successively higher. Historically, when you see that, or when that happens, copper tends to be about 12% higher 6 months out. And there's been 8 instances of that over the last, I believe, 10 years. 7 have been up, only 1 have been down. So that being said, I'm going with the data. Copper seems to be strong based on its price action. Forward returns should be quite positive, 12%. That's a big move. If that's the case, FCX is going to go right along with it. So while it might look extended, I look at that now and I'm thinking, no, it's probably got a little bit more. And again, the trend is your friend. You could make the same argument with the S&Ps over the last 5 years. They just keep going higher, yet all sorts of data came in that would say, geez, why do I want to be long here? Well, those arguments kind of fell by the wayside.
So, David, one of the other things that you like to trade is treasury notes, right? Like that's one of your kind of go-to products.
Notes. Yep, I love trading treasury notes.
Why don't you walk us through what you're thinking there and what you see kind of for the next few weeks?
Yeah, well, I've been long treasury notes after last week's big sell-off. I mean, one of the things I've learned with treasury notes is that big moves aren't the norm.
Right.
It's a very quiet, it's a very kind of sedate market. And when we got whacked last week down into like 137.08, the main reason I wanted to get long was that the yield curve was just so stinking steep that I knew that spread was going to start to flatten, and it did. Now, in all fairness, my initial entries at about 137.24 weren't very good because we got all the way down to 137.08, and I did add down there, but it was painful. But I do see 10-year notes going higher. I think one of the levels that we've been talking about with my clients all week was the 137.28 level. And we got through that today and a little bit into yesterday. So I think from now we get a ride up to 138.16. And that's about a half point move, and that's nothing to sneeze at in 10-year notes. You throw on, a handful of contracts and you've got yourself a nice trade. So I think we go to 138.16. I'd love to see us get to 139, but maybe to get to those levels, we're going to have to, see a lot of concerns coming in on the economic front. And right now, that's kind of hard to gauge. Everybody seems to be really convinced that we've got the vaccine, the economy is going to start to chug along again, and maybe that is the case. I'm not going to try to forecast how that's going to play out. I'll just wake up each day and make my assessment as to when I'll get out of this trade.
Well, Dave, you're making the hair on the back of Kevin's neck stand up talking about bonds going up. So
no, Dave's a trader. I completely get it. Dave, if the trend was lower, Dave would be selling it, and it's fine. He's been right.
He has been.
I'll switch it around if the price action starts to go the other way. I'm not.
He is a true trader. He's not married. He doesn't have pictures of Lacey Hunt in his bedroom up on the walls like someone I know. So, Dave, I want to talk to you a little bit about mountain biking, skiing, and all that stuff. But do you have one last idea you want to leave us with by any chance?
Domino's Pizza is a buddy of mine, and I have been looking at that more from a seasonal perspective. I like Domino's Pizza, which is DPZ.
I thought you were just going to give me like a pizza recommendation there for a second. No, you're going to say, you know what, if you ask them for extra thick crust and, extra sauce and blah, 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 it's going to be like an off-menu item. Okay, continue. I'm sorry.
No, you're totally fine. So DPZ, again, not necessarily relying on the technicals to be the genesis of the trade, but, looking at, historical, some quantitative data. And my buddy looks at seasonals and he likes them in the context of this situation. And we've kind of pinpointed if we can get above $394, we think this has, I can't remember exactly what that upside was, but we're looking for it to go higher. I mean, we think, $430 would be pretty straightforward. We haven't been filled yet. We're waiting for prices to get above there. We were looking at Netflix for a similar reason, but we've since passed on that. I think the other trade we have on, which we like a lot, we've had it on for about a week or so now, is GDX, which is the gold miners. I can give me 2 seconds. I'll let you know we are long that from Give me 1 second here.
That's okay. While you're doing that, I'd love to hear the kind of thought process on that. Are you looking as that this last 4 months has been a correction in the larger trend higher?
Absolutely.
Okay.
Yeah, this one's a complete technical view. We just don't think that this move is done. I could make the same exact argument for silver. I've been long a silver call spread since June. It expires at the end of the month, so I've milked it as much as I can, but maybe we'll get a little bit more out of it. But I think silver and gold go higher, and we chose to go with GDX.
Okay.
To express
well,
that.
you know, we as Canadians, we always are prone to the GDX.
The miners,
like,
yeah.
Exactly.
Something
exactly.
happens, Jess, that, you know, it's in the water or something, and we just you get given a gold mining certificate when you turn of age in Canada. So listen, I can't let you go. You're my pal from Bend, Oregon, home of the outdoors. You got the snow's on the way, but before we talk about the snow and the skiing, let's talk about mountain biking, because I think you are a big mountain biker, right?
I mountain bike just about every day, yeah.
Wow. Now that's good. So I just took it up a little bit. Well, actually, that's not true. I took it up. I used to do it when I was younger. Then my son, I have a 15-year-old son. The COVID, we obviously don't want him going into people's houses and stuff. So I thought, okay, I'm going to have to do this. So I got into it. And Dave, I'll tell you, I lasted about, a month and a half, Patrick, before I broke my hand?
Yeah.
So I sat there and I you know, it's funny because I actually was mountain biking. I was getting into it. I was feeling good. And then I wasn't using a helmet at first because I was letting him use my helmet. And then I got a helmet. And that was the real problem, because I was like, okay, now I got a helmet. Everything's great. I can go for it. And I thought I was a lot better than I was. And I was using pedals that I clipped in. And I went up, like we have these ravines where they go up and down. And I went down. And then I went back up, and I didn't make it all the way up. And then I just rolled down, flipping in all the rocks. And I was all torn up. And then my hand hurt a little bit, and I kind of got up, and then I was like, went to squeeze something. I was like, oh, that doesn't work. Like my hand just stopped working. And so I go home. I walk my bike home. I get home, and I'm like, I can barely type and crap. So, and then kind of a week later, my wife's like, you better, your hand's not working. You better go to the doctor. I go, the doctor's not going to be able to do anything. And I get there, and the nurse has a look at it, and she says, like, I'm going to send you for x-rays, but you're an idiot. Like, I can already feel the break. So the long and short of it is that is my mountain biking career, but you must be like going every day like a wizard. And I want to know a couple of things, like what kind of bike do you ride? Do you ride 29 or 27.5-inch tires? Are you like a downhill guy or more of a cross country?
Definitely more of a cross country. I'll do some downhill, but this is going to sound weird to a lot of people. I like to climb. Yeah. Love climbing. I mean, I love coming down too. I ride a 27.5-inch wheel, and I ride an Intense Recluse. Bought that a couple years ago.
It's a full suspension bike. It's not a hardtail, right?
Yeah, no, full suspension. Yeah. And I mean, it's easy for me to ride every day. My house, or our house, my wife and I, where we live, I can be on the mountain, like a serious set of mountain bike trails called Phil's Trailhead. If you Google it, it's a mecca for trails. That's literally a 5-minute bike ride from my house.
Okay.
So we bike a lot.
So Dave, I don't think you're as old as me. I don't know. You look like you might be roughly around the same age, but who knows? Am I ever going to have a chance to like do jumps and do stuff? Like, do you do those? Like, do you actually get air?
A little bit. I grew up doing BMX, and I used to do that stuff. I'm just not willing to do it anymore because what's the upside? I get that momentary rush, like yay. But if I munch, then I can't work. Then I can't do this, and no, it's just not worth it. So I got a couple guys that I ride with they kind of forgot that they're in their 50s, and every once in a while they're banged up pretty bad. So I don't try to push it like that. I mainly go out for the fun aspect of being outside and just the cardio.
Okay. So you're telling me I should probably forget it.
No. No, in terms of jumping?
No, jumping, that is. Jumping, that is. My son does this crazy stuff, and I'm like, I'm not going to do that. I'm going to go around. Like, I
don't do any of that stuff. I mean, I'll get going quick on downhill, but I try to keep the wheels on the ground for the most part.
Well, I might take that. So now let's talk skiing. You're like, I'm actually surprised you're saying it's just starting to dump. I was talking to a buddy that's a Whistler. They're expecting, I guess it's the same weather pattern, and they're looking for some snow. But you're skiing now, aren't you already? Like, isn't it?
Well, I do something that most people don't do. I skate ski. I used to downhill
cross country. Okay.
Yeah, so I skate ski. In fact, we went skate skiing last Saturday, my wife and I. I mean, it's a killer workout and it's beautiful. We'll probably be doing that this weekend too. We're supposed to get a couple feet up in the mountains.
Oh, nice.
It's kind of like Whistler here in terms of when the mountains get dumped on. It's like they measure it in feet, not like 5 inches. It wouldn't be unusual for Mount Bachelor, which is the local ski area. Like if you get a system that just kind of hangs over that ski area, I mean, you can get a 3 or 4 foot dump in like a day or two.
Now,
and that's totally common.
So you're near the Mount Rainier, right?
It's probably about 4.5 hour drive north of here, heading up towards Seattle.
Okay. Have you ever climbed it or thought of climbing that?
I've never hiked up it. No, I've thought about it. My wife and I do quite a bit of hiking in the summer as well as mountain biking. That's probably on our bucket list for sure.
Yeah, I know.
I don't know if we'll get to the top. You got to be. It's not one of those things where you're just like, "Hey, let's go hike up Rainier today."
No, for sure. You need to plan for it. You even need to train for it. It's a big deal. Like you're getting up that final push. You're getting up at 4 a.m. or 3 a.m. to make the push so you can get down.
Exactly.
It's
which one's even trickier, and it's closer to our house, is Mount Hood, which is here in Oregon. It's about 2 hours from my house. That's a very popular place, and you're starting at the crack of dawn. I've never done it, probably won't do it. I'm not into, climbing with an ice axe and stuff like that. That's not my thing, but a lot of people die there every year. It's not.
Yeah, no.
You would think, I'm just going to go climb this mountain. It's like, no, shit goes wrong.
I hear you. And then the final thing before we let you go, I think we were chatting, and you're a musician.
I am. Yes.
Why didn't you tell me about your special talents of the musical variety?
Well, I've been playing drums and percussion since I can't remember, probably 10 or 11, and did the whole thing like you do in high school. You're in a band with your buddies and you play gigs and stuff like that. And I've always played. And then really in the last couple of years, I stumbled into a group of guys here in the Northwest that are really good players. And I was like, hey, man, I play drums. And they're like, yeah, we need a drummer. And then can you play percussion? So I just kind of ended up walking into this group of guys and a gal. We got a gal lead singer as well. And we play gigs around the Northwest. I play with a great group of musicians. In fact, when I'll usually default over to percussion because one of my buddies here in town is a guy by the name of Jeff Ingram. So when he's in town, if we're playing a gig, he will play drums because he's the tour drummer for Chris Christopherson. Okay. And so he's pretty damn good. Of course, right now he's not doing any touring, which he's just going nuts on. But so yeah, that's the music thing. I mean, I love playing music. We play a lot of good funk, a lot of good old 70s and 80s kind of music, and I just love playing with great musicians. It's a joy.
So when you said that you were a drummer and that they needed a drummer, is that kind of like in Canada here? You're always looking for a goalie, and there's always like goalies for hire. Is that a little bit like drummers?
I kind of think so because, most musicians is like, I play guitar or I play, keyboards or something like that. And my experience over the years is that drummers are always like these flaky kind of guys or gals. Well, not the gals so much, but it always seems like the bands are like, yeah, we had our drummer, but, X, Y, and Z happened.
Right.
So
he spontaneously combusted.
Yeah. So
exactly.
But it's great. I mean, we even played gigs during the COVID thing. It was great. And we haven't been practicing lately, though, because it's cold here now and nobody wants to get together in close quarters.
Right. Yeah. Okay. Well, thanks for sharing that with us. Okay. So, Dave, before we let you go, why don't you tell people about your service, where they can find it and chat with you if they're interested?
Sure. Well, my company's Aspen Trading Group. We're based here in Bend, Oregon. AspenTrading.com is the website. Basically, what I do is I provide what I'm doing in the markets to clients, whether it be a specific trade or in terms of the S&Ps, providing them levels that I'm looking at on an intraday basis so that they can kind of integrate them into their trading. We also do a trade copier / manage account program as well. So if you're not one of those people that wants to be self-directed but want to have the same trades, then you can go that route. So been doing it for a long time, really enjoy it. And that's Aspen Trading Group. And you'll find us, all around the web as well.
Terrific. Well, thanks again for coming on, and we'll look forward to seeing you again next year.
It was a pleasure, Dave.
Thanks a lot, guys. Merry Christmas to you and your families.
Thanks. You as well.
Thanks. All right. Cheers, bud.
Okay, Patrick, time for This Week in Trading History. What do you got planned for us?
You know what? In spirit of the IPOs of Airbnb and DoorDash and all of these others that are the hot thing right now, it's appropriate that it was on this day, or this week in history, on December 8th of 1999, when VA Linux System IPO was out. And so a little bit of context for this. The stock first was initially going to be priced at like $12 or something. And then it ends up being offered at $30. And the shares jump to $299 on the first print and trade as high as $320. Closed the day at $239, up 698%, making it the biggest IPO pop in history. The founder, which was that 38-year-old Larry Augustine, would become a billionaire overnight. Many of VA Linux employees would become millionaires on paper, but back then they required to hold their shares at least 6 months. So by the time that they could sell their shares and the 6 months have passed, VA Linux was below $40 a share. We saw, obviously, the really hot market of 1999. It wouldn't last that long. It was 4 months later that the NASDAQ hit its peak, and all the stocks started rolling over. And 1 year after that IPO, VA Linux was at $8.49 a share. Now, after years of selling portions of the business off and changing names, the final piece of the company, known as GeekNet Inc., at the time was sold to GameStop in June of 2050 at $20 a share, making this a story of the past. And we found this great clip, Kev, online. Well, I want to share in a second, but you remember this, don't you?
I do remember this. This was a crazy time in the late 90s. Even like in the midst of the dot-com bubble, there was a bigger bubble that was even crazier, and it was the Linux bubble. And I'll tell you a quick story. I had a machine that did interlisted arbitrage, and what we did was we looked for stocks that were listed on both the Toronto and the New York Stock Exchange. And in the past, those used to be done, that arbitrage used to be done by people on phones. And I had written a program that allowed this to be done automated. It was kind of the first of the high-frequency tradings, I guess. And the Americans hadn't figured this out yet. They kind of couldn't be bothered to come to Canada. They didn't even barely traded up here. And I had a stock that during this bubble that the arbitrage existed for so long in its, like on one day during this madness, I was sure it was a different stock, Patrick. Like usually you'd make 50 cents if it was a great trade, maybe $1. This thing was like at a $4 or $5 spread, and
you were just harvesting it.
I was doing 10 at a clip, and like we turned around and we were upsized, and I was like the younger guy that was in charge of running it. He said to me, look how much we made. And I said, well, shit. Usually when you make that much, there's an error. And so you jump in there and you realize, oh no, those are different stocks and I'm getting screwed, right? And I'm trying to figure out where the error was. I'm trying to do it, and I'm like telling, go ahead, gingerly keep going and stuff. And that's how dumb it was. It was just the craziest thing I'd ever seen. It literally, I think it sat at a $4 or $5 premium for an hour before we finally did enough arbitrage so we brought it in line.
Oh, wow.
And
what a great story.
It was a crazy time. Crazy time. The
Anyway,
Linux bubble. Let's roll the tape,
yeah,
Patrick.
Yeah, let's do that.
Now, we have an IPO that's going to go today, and when I mean go, it is going to go. The estimates I'm hearing are staggering, but watch VA Linux Systems. It goes at $12.40 today. The symbol is LNUX, a provider of large-scale computer service and workstations specially designed for the Linux operating system. The original range on this IPO was $11 to $13, then $21 to $23, then $28 to $30. Priced at $30. And the estimates I'm hearing, I don't want to repeat because I don't have a confirmation, but if they're true, they will blow your mind when this stock takes off at $12.40.
So leading up to the IPO, we had arrived actually in San Diego on Tuesday night. We spent Wednesday morning meeting investors in San Diego. We flew up to San Francisco. We spent Wednesday afternoon meeting investment firms in San Francisco. Then on the Thursday morning of the IPO was when our stock would be traded publicly. So it was nice that we had ended the tour in San Francisco because we could go to the Credit Suisse trading desk the next morning to watch the public offering. And in San Francisco, being close enough to the company and to our families, we could invite people up to actually join us in the first trade. So I invited my wife, and we invited Linus and Tova and a number of other friends and people who worked in the company to join us. Whenever we invite Linus and Tova, they have 2 young children, and I have a daughter, Andrea, and we always bring the kids along. So we went into the Credit Suisse trading floor with all these traders, and there are these 3-year-old kids running around and chasing each other around the show floor, around the trading floor. So Linus and I walked in, and we walked up into the trading floor, and everyone was very excited. And we kept asking them, "Well, how's it going? Are things going okay?" And they said, "Oh, it's we're really excited. We think things are going well. We don't want to say, we don't want to jinx anything." We walked in. There was a big screen TV showing CNBC, and it was amazing to us. But the theme for the day was Linux. I turned to Linus and I said, "Gee, did you ever think, you'd walk in here someday and Linux would be the theme on CNBC?" And Linus, in his joking way, said, "Oh, absolutely." So we walk in and they show us the buy and sell orders coming in, and it's incredible. We're seeing numbers like $320, $340 a share, and I'm just in complete shock. This is over 10 times where we priced the offering, and it was incredible. And I remember Linus just kind of sort of patting me on the back and saying, just relax, and it was pretty exciting to see that. It was just amazing. We were stunned. We were lucky that we were able to get back to the offices. We'd been in San Francisco, so we could come back to VA's offices to see everyone in the office for the IPO. We got back. We had everyone was obviously very excited. The IPO had done just tremendously well. We had a little party that we put together. It was interesting. While we were celebrating, though, there were plenty of people that were still trying to work. I recall cries of, "Be quiet, we're on the phone, we're working," as we went into the offices. One of the things I did was I gave the roadshow presentation for the employees back at the office so they could have an idea of what we'd been telling investors and understand exactly what we'd put together for them.
But again, the story of the day is VA Linux now up 766% to $235 to $265. Sue, the best performing IPO ever. Here it goes. Sycamore Networks was priced at $38, surged to $270. This has just beat it.
All right, Kev. Time for No Stupid Questions, but we got to get Lena on here to read some of these. Lena, are you here?
I'm sorry.
Are you here? Do you hear that? It's like a few beers in your
Are you here? Are you here?
I was like, what are you saying?
Anyway.
Okay, first question this week. What charting program do you recommend? Retail investor, so limited budget. Love Market Huddle. I watch it for the beer. Thanks.
For the beer. Nice.
I do it for the beer.
Yeah. Well, Kev, I mean, you yourself like a couple of these free charting softwares. Well, we got to give our good buddy Rob a plug
Koyfin.
for Koyfin. Yeah, like
Yeah.
what a,
And,
they just keep making their program even better. Like
and
just
it's easy to recommend them because A, it's free, and B, it's really good.
yes.
And you go look, he continues to make this better all the time. So for those who are, want to check it out, it's koyfin.com.
Yeah.
It is currently free. You just sign up. When you ask him, he's
Great
eventually
stuff.
going to have a paid tier, but for now you can enjoy it. it's kind of like a little mini Bloomberg. I think that originally Rob
Really
was a
good.
fellow that sat on a macro desk, and he saw this opportunity to come in there and write something that's not 30 grand a year or whatever the dumb number is that we pay for.
And he's not even paying us to say this, right?
He's not. We better actually not. It's gonna be
Anyway.
like he's gonna, but it's easy to say because it's a great product, and have a look at that.
And,
so
I just wanted to give a quick shout out because we're always using TradingView, and now you have to pay for TradingView to
Right.
use the full features of it. But it is one that I tend to use a lot as well, and it's very retail priced. I mean, during like their sales periods, you can for $200-300 put together get access to the majority of their stuff. So whether or not you're using a TradingView or go to Rob's Koifen, which is just awesome. Both of them are very good ways for retail investors to get access to the markets.
Right.
All right, Lena, next.
Second question. Great show, team. Happy holidays to everyone. You guys trade in very broad universe. How do you keep tabs of market developments in so many different products? Time spread, fraud, warrant, ARBs. Do you have alerts or monkeys scouring every chart for trading thesis to farm?
Well, Kev, you want to start?
Yeah. So listen, there is a lot, and it is challenging when you have so many possibilities in front of you. You go down a rabbit hole, you start trading something, and you might miss opportunities and other things. So using scanning software and other things of that nature is definitely helpful. And the other thing is that we do both we both have an extensive community of people that we talk to. You mentioned fraud, warrant ARBs. Like obviously Harris, who's on our show, I talk to him on a regular basis, so he might go and alert me to an opportunity. And there's other people like that. So one of the things that I would recommend to people is don't be afraid to start your own little community. Start with friends. And the thing about this is that most of us don't run out of liquidity on a trade, so there's no issues with once you put the trade on, telling someone about it. And even you'll find that I'm involved in some groups that are like big time macro guys that I'm actually surprised that they even let me in their little group. I'm wondering, like, I'm pretty sure they just wanted the pictures, like that's all, because they're way ahead of me. Oh. But so I would tell people that make sure you can do a lot of things like from like on the computer side, but don't be afraid to use the old human side, because there's a lot to be said for human beings alerting one another to possible kind of opportunities.
Well, so you know what? I'm going to talk everyone back a little bit from that, because the way I look at this is that the market is so incredibly dynamic. There's an infinite number of different things and an infinite number of ways to trade them. And everyone goes into the market and really finds what they're looking for and the way they want to trade it. Doesn't mean you'll always be successful at it, but if you want to be a day trader, or you want to be a positions trader, or you want to be a long-term investor, the market is the market, and you're going to be able to build everything there. I think that you don't want to stretch yourself thin. It's this idea that the grass is always greener on the other side, but sometimes simplicity is better. And it's nice to hear someone talking about playing these warrants or playing this ARBs thing, but that doesn't mean that you have to go there. Like everyone wants to feel like there's somewhere money being made and they want to go there, but sometimes when you stretch yourself so thin, you can't stay on top of everything.
Well, like the other thing though, Patrick, sorry, go ahead.
No, I was just going to say, like, Dave was just on, right? And Dave day trades the S&P, watches some currency moves, trades the bond market. Like, that's his cup of tea. Like, he doesn't need to go and broaden it beyond that. That's where he makes his piece. And every one of us needs to kind of find where's your specialty, where are you going to focus your attention, right?
So that's a great point, Patrick, and I completely agree that if you're going to go and you don't want to trade new things and you're going to focus on your product and or your process, sometimes actually listening to other people can be a detriment. You can find yourself going down a rabbit hole and or trading something that they're trading that's perfectly suited to them, and it's not actually suited to you. Yep. So I agree with you there. Having said that, I will tell you, so I originally started on an institutional equity desk. I left and I went off on my own. And yes, going off on your own was good in that you ended up being able to focus on the things that you really knew. But eventually what you find, or what I found, was that not being around other people, not talking to other traders was actually hurting me. And I don't need someone to say you should buy XYZ, but I felt like I needed the people around me just knowing what they're trading. And a lot of times I'd see that, and then maybe it would trigger another idea with me. And, like Cuppy might tell me something, and I'll go, that's a dumb idea, and I won't trade it. But then another one he'll say, and he'll just kind of toss it off, and he doesn't care about it, and it works perfectly for me. I'll go dig into it, and I'll go find out. And so for me, at least, I think that kind of bouncing back and forth of ideas and having someone to chat with is actually really important.
There you go. And so let's, and Lena, there's one more. We're going to do 3 today, right?
Yeah. So the last question of the week, this may be difficult to answer, but what do you think the percentage of trading on the NASDAQ or Dow is done by quote unquote algos? Are they typically programmed based around technical analysis?
Okay. So I'm going to take this one too, Patrick.
All right.
A lot of people think algos are these programs that are almost like designed to come up with a day trader would. They're sitting around, they're looking for an opportunity to go long Tesla and then sell Tesla. And although those do exist, that is not the majority of algos. What the majority of algos are is actual institutional accounts that are putting in orders, and instead of, in the old days, they would work a block and give it to a trader. Now they just say, sell it at the VWAP. And what the VWAP is volume weighted average price. So they just piece a little bit out all the time. So the machine, and listen, there are a million of these different types of algos, and they're out there trying to outsmart each other. They're trying to figure out ways to do it. But at the end of the day, what those are actual orders for a client that wants to buy or sell a particular security. So when we talk about that, what percentage do I think of that trading is done by algos? It's huge. It used to be that algos were just something that the index folks did, and it wasn't something that was used very much. But in the last 20 years, it's really taken over. And now it's almost like that is the standard, and it's unusual for a trader to do it by hand and not put it in the algo.
Yeah, there are CTAs that run technically driven kind of systems, but that's not the same as these intraday algos. Like they will do that. I mean, this is what makes a market. There's all these things are coming in and providing different liquidity.
But listen, the CTAs that are doing that it's an extremely small subset. Now, the other subset is HFT guys, and that is you could call that an algo as well. But those are just crazy. Get on the bid, get on the offer. You buy 1,000 shares, get on the offer. Oh no, it's the bid's going, hit it, blah, blah, blah. And it's just kind of back and forth, back and forth, back and forth. And that is a lot of the volume, but it's not really a lot of the volume that actually moves a market. Because they're just trying to provide a market around what they think is fair value for a brief period of time. So the orders that are moving the market, the ones that are actually influencing it, are, a big fund comes in. Bridgewater says, I think that the S&P is going to go higher. We're going to sell T-bonds. We're going to buy S&Ps. And they stick it in. They buy, 10 million spiders, and they just VWAP it all day. And those are the vast majority of it. In the old days, what you would have found is they would have bought $1 million on a block, or got offerings on $500,000 and worked it throughout the day. And that's to a large extent an unusual thing. Most of them, it is now algos. But algos are, just to be clear, algos are not kind of what a lot of people think they are.
Yeah. All right, Lena, why don't you tell people where they can find us?
Well, if you have any questions for Kevin or Patrick, submit your questions to nostupidquestions@markethuddle.com. No stupid questions, only
stupid answers.
That's right. All right. Time for skin in the game, Kev.
Yeah. Well, Patrick, you squeaked one out. I'm proud of you.
You know what? For the whole shiny dollar. Actually, it's not a loonie. Damn it! It's a paper dollar.
Yeah, it's not shiny.
It's the Duke and Duke.
Have they gone to plastic dollars like us? No, have they? Like, I'm being serious. Like, I haven't touched an American dollar in a while. Or they probably won't. They probably think, what's this plastic money? Right?
Well, we do have monopoly money up here in North.
We do. It is funny. It does look like it's all colorful and stuff.
Yeah,
and then the coins. Like, I remember the first time going to England when I was a kid, and I went there and I gave a 10 quid note or whatever they call it, and they gave me back some coins. And I thought I got ripped off. I'm sure Americans are like that. Like, what? Gave the guy 20? I got these coins. The guy ripped me off. How much is it? Like a stick of gum here. Okay.
So listen, do we want to first review the bet or talk about the rules?
Okay, let me do the rules. Skin in the Game is a weekly opportunity for us to demonstrate that we are degenerate gamblers at heart. Every week, one of us presents a wager, and the other guy chooses which side of the bet he wants. Every wager needs to settle by the next episode, and the currency for the wagers is, we all know that. It's the winner of the bet is obligated to create a new bet for the following week. All wagers settle in full, and there will be no netting of positions.
No netting. We settle in full.
Yeah.
And you know what? We haven't yet settled since we started. There is a long list of delivery.
I have one of my readers that reached out. He told me that he was at one of the original Market Huddle meetups that we had.
Yeah.
And I told him, I said, listen, once this COVID's over and we all get vaccinated, if Bill Gates lets us, because Bill Gates will be controlling us, but if Bill Gates lets us, we're going to have a Market Huddle meetup, and we're going to basically it's going to be a piss up like we've never seen.
All right, so let's talk about last week's bet. Last week, you tried to bamboozle me.
Yeah, I did.
I
did not expect it. You chose you did not choose as I thought.
Well,
it was for those who don't know. I said crude oil futures at the time they were trading at 46.26, and I gave him the above or below, and he chose above.
And you know what? The oil inventories, I thought I was done. They came in with a monstrous build, and it stayed down for a whole 20 minutes.
Yeah,
and then freaking goes face to that guy.
You've been listening to that guy you cheat on me with all the time too much.
Wow, no, but
inventories don't matter. So Patrick wins, and he wins that one thing. I will tell you this one thing, Patrick.
All right.
For those who don't know, Lena tweets it out, and everyone gets to vote on it to see who they think is the biggest idiot. I voted for you. That's what
which way was this? Did you see?
I don't know. Lena, are you there?
Yeah, I'm here.
What was the final tally?
Can you have a look?
So it was about 59% for Patrick.
There you go.
Our listeners are smart.
We have very smart listeners. Yeah. It's I like that.
Well, although it was close, to be fair. It was closer than I thought it was going to be.
I'm going to stay in spirit of the over/under with this week's bet. Because I have to now, as the winner, I have to present the bet now that I've got $1 in my pocket.
Yeah.
It's going to be literally over/under, same way.
Okay.
But I figured, how could we, with Brexit looming, not talk pound sterling?
Oh, that's a good one. Okay.
Yeah.
Let me look.
And you know what?
Opinion too. That's my problem.
And it really, it's pulled back off of the highs, so it's and been weaker than the euro, and largely because of all the news coming out. So it's a very neutral spot, right? Because it's nowhere near its high there, and you get to pick over under going into next week.
Done. Lower.
Lower?
Yeah.
All right. So it's 132.17. We'll call it.
You're tipping me there
118.
of like
118. Okay. 132.18. Okay, 132.
No, 132.17.8. We're gonna get it right, Lena. Make sure.
Well, I only go 4 decimal points. My brain doesn't function to the 5th one. All right. So anyway, that's
I'm just
where
gonna
we're
tell
at.
all your brokers that, and they're gonna round everything down. Patrick's brain doesn't work to the 5th decimal point. You can round it all the other way, or round it up your buys and round down your sells.
All right.
Okay, so there it is. Oh, we got to decide. Oh yeah.
Oh yeah. No. So where do you want to start?
Pint of beer.
I'm ready to take you to a burger bet.
Okay, I'll go to a pitcher.
My goodness. You know what? I just don't want to go.
Come on, we got to do it sometime.
No, a bottle of wine. I'm ready.
Go.
I'm going all the way to bottle of wine.
Sold. Done.
Done.
Nice.
All right. All right, so the pound sterling, I'm on the up, you're on the down.
Yeah, there we go.
All right.
Good old Bojo, you better mess this up, buddy. He will. That guy makes our prime minister look like like a dreamboat. Okay. Thanks for tuning into the Market Huddle. We appreciate you spending some time with us. Please give us a follow at the Market Huddle. We're there on Twitter every day. Actually, I say we are, but it's actually Lena. And she always appreciates you giving her a shout out. And listen, you can follow the Market Huddle on all the networks: Google Podcasts, Podbean, Spotify, Android Play, iTunes, and YouTube. A lot of people watch on YouTube to see all of our charts and visuals. And while you're there, please like and subscribe to get our latest content. Ring the bell, as Lena likes to say. And please, if you could, rate us on iTunes. You know the drill. Patrick, where can they find you?
You can find me on Twitter at Patrick Ceresna, and as well you can find me at bigpicturetrading.com. Kev, where can they find you?
I'm at Kevin Muir on Twitter. Patrick, you should have seen today. Well, you know what? Let's save it for the after show. I got something to tell you. I've made friends with some Bitcoin people on the internet. And so you want to check out my letter. It's at themacrotourist.com. And listen, you can never have too many friends. Bear market, bull market. We're just happy to spend some time together on this crazy ride. So thanks for tuning in, and now stick around for the after show. Lena?
Yeah.
Okay, so I gotta tell you what happened. So I was talking to my buddies, and
Lena, but not me. You
No.
don't. You're just gonna want
I
to
just
tell
wanna
Lena.
tell
You're just
Lena.
waiting for her to get on the show,
Exactly. I don't
so you
wanna
can
talk
tell her
to
the
you.
story.
I talk
All
to you
right.
too often. So my buddies and I were chatting, and they were talking about Newfoundland, how beautiful it is, and we're talking about Fogo Island, and then they started talking about this car race, and next thing I know, they show me this video of this Ferrari at this Newfoundland rally that he puts it in the drink. He literally just steps on the gas as it's going around this thing, and it just puts too much, and next thing you know, he's in the water. Okay, I think this is hilarious. You know me. I'm like, okay, I got to make this and tweet this out. So I cut it up and I put it on the Twitter, and I say something like, when the new hodler, gets his new ride, or something like that. And a lot of people thought it was funny, but the Bitcoin folk, they got all insulted, and I was like, oh my God, what is with you guys? So I was wondering, do they lose their sense of humor when they buy Bitcoin? Is that what happens to them? So then I told them, don't take life too seriously. No one gets out alive. And before you send something about me being a no-coiner, I beat them to it. And I made some derogatory kind of no-coiner thing.
Yeah, I saw that tweet for sure.
Yeah. But it all started because they just take themselves way too seriously.
Yeah,
I don't know.
Wait, listen. I'm not. I don't want to.
You don't want the no coin. The Bitcoin
I don't want.
you?
I don't want. Yeah, I'm actually going to take a very neutral stance. But what I did want to talk about before we get to rating the beer is Lena, was it just me, or was Kevin like a 12-year-old schoolgirl at a Justin Bieber concert when interviewing Gartman?
Yes, fanboying to the max. I have never. I could feel Kevin blushing through the internet.
Well, you know what?
I couldn't see him, but I just knew.
Lena, I have to say though, I didn't say it to Dennis, but when I back in my CIBC days, in 2003 to 2005, when I was particularly on working with the fund manager there, I read Gartman every day, and he kind of taught me a whole bunch of stuff. So I was a big fan, but Kevin kind of. He took it to another level, so I was like, I don't have anything good to say beyond.
I wore my Dennis Gartman shirt, the tour shirt, the Dennis Gartman 08 tour shirt. Yeah.
You got to start a fan club.
Oh yeah.
If there isn't one already.
All right, let's rate this beer.
Well, before we do that, Lena, you actually conjured up terrible images though when you say Justin Bieber concert, because that
was me.
I've actually gone. It is
really?
You actually gone to
Justin?
a Bieber concert?
I've gone to a Justin Bieber concert.
What? Was it your daughter?
By choice?
No, not by choice. I took my daughter, and I swear to God, it was the loudest thing I've ever been to in my whole life. And it's not like I've never been to big concerts.
You get a stadium full of 12-year-old girls. You're
was
going deaf.
Crazy. I was so happy when he started playing because they would stop screaming a little bit. And I know that sounds crazy that you're excited about Justin Bieber starting to play, but you are actually happy about it.
You know, when you go to concerts like that with kids, you got to take earplugs.
No, so actually that is the kind of pro parent tip there. I did not realize that. I will do that in the future. It's even more like I'd rather see the
chew at least 3
front
gummies,
row
right?
to the Who than go to another Justin Bieber concert and have to like lose my hearing. Okay, let's do the beer.
All right. Who wants to start first?
Well, I didn't drink any.
Oh, okay. So, Lena, you weren't supposed to tell anyone. Okay, no, I'll rate it. You know what? It's right down the middle. You know what? It's not a bad beer. This is actually a very drinkable beer, but it doesn't stand out in any way. So it doesn't deserve a bad grade, but I don't know how I could give it a too high of a grade because that would imply that it's in the... Anyway, 7.5.
Oh,
What if it was on a tall can?
Do you know what?
It's a short can, right?
yeah.
I took your score?
Yeah, but I'm not gonna. I'm not gonna let that bother me. I'm just going 7.52. That's my score. Completely
There you
agree. Very unusual for Patrick and I to agree on a beer, but there it is. Just
That
kind of
means
middle of the road
everyone
beer. The
should
other
sell.
thing is we're drinking this other one because like we got a whole bunch of these. My buddy sent me, and we're drinking this one called Pils, and it's a Pilsner.
Yeah.
And so we're drinking these things,
That's
but
good.
these little cans, they just keep going down, and they're just
Like you can crush them like in a
like,
second.
I just feel like, oh God, there goes another one. Oh God, there goes another one, and it's just like, I don't know. It's it kind of makes me worried that you start to feel like an alcoholic with these little ones. I like the big ones that you can sip for a while.
a couple extra 100 milliliters goes a long way.
Yeah.
Anyway.
We're gonna have to shotgun beers at one of these.
Okay. So
Any
what
big
are we gonna
plans this
talk about?
weekend?
Anything new and exciting?
Not really.
No, my life's
This
boring this
lockdown
weekend.
has got me, in a loop almost. I'm watching old movies now.
What are you
I'm,
watching?
I just watched Carlito's Way yesterday.
That's a good movie.
Those way.
I even saw that back like 10 years ago, whatever it was.
I think it came out much earlier than that. I think.
No, but I saw it like I'm just.
Oh
rounding.
right, you're.
Oh, I know what we can talk about.
What?
Lena did something for her boyfriend.
Oh.
Oh yeah, I did.
Yeah, so why don't you tell
I did.
everybody?
Yeah. So Luke's a big fan of Kevin Smith. For those of you who don't know who Kevin Smith is, he's the creator of Mallrats, Chasing Amy, Dogma, Jay and Silent Bob, and he's been involved in a lot of different things. And he was on Cameo. Kevin, you were talking about that a couple of weeks ago, and I decided to.
How much
get
was
him
he?
to-
No, you can't say. That's not right.
I can't say how much I spent.
Go look it
Oh
up,
my
folks.
God! I could look it up right now.
But don't say it out
can
loud.
look it up,
It's
but
one
don't
thing to go
say
look it up.
it.
It's another thing to say it out loud. How gauche, Patrick.
Well, it doesn't
find out.
matter because in the end he wanted that guy. It's not like you chose a cheaper or more expensive one.
So
because
I
you were
loved it
cheap.
when you
And-
saw his
that was-
office. And
Yeah.
it was a
Yeah,
dump.
He gives you a tour.
It was a dump. It made my place look like a nice
Yeah,
office.
he said he had his wife on the wall there.
And exactly, that's the part I wanted to go to. Remember my pregnancy photos?
Oh, yeah. Is that what you have in your office?
Oh, I
'Cause
got
you were
them everywhere,
pregnant.
Lena. I got
'Cause
the-
you were
I-
pregnant.
I have blown up pregnancy photos of me and my wife all naked on the office.
Oh, okay.
I'm kidding. I don't have that, but I do think it's funny that Kevin Smith.
That's
does.
why you never used the webcam, right? Because it's like.
But yeah, this gift was great. He sent back a video that's about 2 minutes long, I think, and it seemed very personal, which was nice, and
Yeah, well-
it was an unforgettable gift.
Yeah, it's a good
I
call.
had
awesome.
to give Luke. I had to
Yeah,
give it to
big
him
bonus
a little
points
early,
for you.
but yeah, definitely big bonus points. So we'll see what he gets me for Christmas.
Oh. All right. Well,
You can get Snoop for $1,000.
Get who for $1,000?
Snoop Dogg for $1,000.
Oh.
Well, American, so that's like $1,300 Canadian.
I don't know. That doesn't seem like that guy's. Although I'd asked him to say, "Let's go streaking." Yeah. I would get him to talk about that.
there you go.
Yeah.
Have you ever seen him and Martha Stewart? They're just hilarious. They're an odd couple.
Hilarious.
Do you think that Martha
Hilarious.
likes the weed?
Oh, I'm sure.
You think?
Probably. She's like, how old is she?
I don't know. She seems like more
Is
like
she 80
Benny's
now?
or
70
like,
something?
or what's the one that Adderall? She seems like Adderall.
I don't know. At her age, I mean, with her wealth, who cares? She probably just gets whatever she wants. Right?
Yeah, maybe she picked it up in jail. Little marijuana habit.
All right.
Okay, well,
let's tap out,
sounds like we're pausing here, so we'll call it a day. What's everyone? I don't have anything exciting I'm eating. I don't even know. How about you guys?
Nothing.
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 We got nothing good to say, folks.
Just Christmas season is coming up, so kind of hard to think about how this year went by so fast when I was basically home.
Fuck 2020.
time.
It's almost over.
Right? So hopefully 2021 will be much
Oh,
better.
shit. The first 3 months are going to be brutal. Don't count on it getting better anytime soon.
Oh.
I hate to, it's truthful. Just keep your... But summer will be great.
I hope so.
All right, we'll see.
Hopefully we can get out.
What do you think Bill Gates did when he controlled that little old lady from England?
What?
When she got the vaccine.
Oh.
That's a bad joke.
You know what I love? My favorite joke is people saying Bill Gates is putting microchips in there to control us. And everyone's like, oh, that's so terrible. Bill Gates is awful. And then Elon Musk literally says,
Yes.
I'm going to put microchips in your brain. And everyone's like, great. That guy's awesome.
Yeah. I think there was a meme about
I know. It's
that.
awesome.
Like, it's so
Actually, Lena,
true.
I want to ask you about this because nobody in my trading group knew. Who are those? On that meme, there's that kind of character that's drawn and he's like, it's a terrible drawing. And a lot of people use it. Who is that? Where is that from?
Oh, I don't remember. I you know what?
Well, just Google Bill Gates, Elon Musk, and then let's look it up. Bill Gates, Elon Musk meme. I'm pretty sure it'll be the first one. There it is. First one, Lena. Who is this guy on the right?
I don't know.
So, Patrick, can you pull that up and show everybody so that maybe someone can
What
let
am
me
I
know?
Googling? I wasn't paying attention.
So, Patrick, type in Bill Gates, Elon Musk meme, and then pull it up on the screen, and we'll all look at it here. And I want someone to help me with this. Tell me when you have it, Patrick. While you're doing that, I'll kind of kill time. It says, Bill Gates, let's make more vaccines. And then this weird character says, no, you will put microchips in our bodies and track us. And then Elon Musk, I will literally put a microchip in your brain. LMAO, nice.
Hold on.
Patrick's still working with this.
Well, is this one?
Yeah, okay. So, listeners, I need some help. I'd like to know
I'm struggling.
who these, I've seen this character on the right, this guy and this other guy, and I want to know where that's from because it seems to be everyone uses it. I don't even know how to describe
I
this.
have no idea.
Yeah.
Maybe it's a.
Someone will know.
I have no
There'll be a
idea.
millennial out there. We might even have some Gen Zs that are listening. That'll help me with that.
Hopefully.
Okay, folks.
All right.
Have a great weekend. Thanks for
have a
tuning
great
in.
weekend, everyone. Thanks. Yeah, and have a great weekend, everyone. Thanks for listening, and cheers.
See you guys later. Bye-bye.
All right, cheers.